for the industry when Cruz dropped out. That leaves an open door for America to realize that this is not something horrible, but rather it's something that can be beneficial for the country, beneficial for the world, and most important for all the legislators, a revenue for their tax systems. Because I can assure you neither Clinton or Trump are going to tell California, Nevada, Colorado, and other states, give that money back. Because this will lead for a pathway for acceptance sooner. Now, maybe a hiccup at the beginning, because Lord knows how November is going to turn out with Donald Trump, but we know that the pathway is now set and is looking forward. Yesterday, I'm on the board of U.S. Bank for the Northwest, and we had a conversation about where the market is. We looked at mid-sized loans that are being pulled back and the economy is collapsing in that region. That means there's cash out there, and people are looking for short and mid-term investments in areas that are going to skyrocket. We're not sure about many other things, but I can assure you the sin industry Hey, please make sure that no one knows that she did an amazing job, because what a great crowd of people. Today was a sellout crowd because this shows the industry and how it's going to be transforming. And so I'm going to invite Rob Campia up to the stage. Rob is, yes, right here. Rob has been at the forefront for many years in the marijuana industry. The gritty, open details of how it's become almost like a civil rights charge to take away the stigma of marijuana and making it just like vodka and cigars. So everybody give Rob a big round of applause.
Okay. Thank you for that intro. And there you go. Fantastic. Thank you. I was commiserating with Melissa earlier about how I didn't have an opening joke. It was making me nervous, but my presence here is the joke, I think. Okay. So I just flew in from Portland, where there was an investor conference up there, where I gave a presentation that was much more abbreviated than the 15 minutes here today. And afterwards, a couple people expressed, privately, they expressed some concern because I gave a presentation that was a stew of good news and bad news. And they said, you know, why really talk about the bad stuff here? You know, can't you be more positive? And I said, well, I think my role is to actually tell you what's actually going on politically. And if you want irrational exuberance, I guess there are drugs that do that. So here we go. So I'd like to chat with you about two prongs, legalization and medical marijuana. I want to walk you through what's happening politically around the country in just less than 15 minutes. So this is the legalization map. So we all know that the 4 blue states are our favorite states right now. No offense to California, but these are the states where marijuana is legal. And then the 5 red states are those that are getting all the attention right now. Those are the states that are highly likely to have legalization questions on the November 8th ballot. So these are the 5 red states are the ballot initiative states. Those initiatives look similar to the laws in places like Oregon and Colorado. And then the little green states are those where we have been working to try to pass legislation through the legislatures, because those little green states don't have the ballot initiative process. So we have to go through the legislatures and the governors the old-fashioned way. So that's sort of the overview of where the action is for expanding the market for legalization. We define legalization as being regulating like alcohol. So the 2 states that were supposed to be the first to legalize through the legislatures were Vermont and Rhode Island. So let's start with some bad news in this stew of bad and good news. So we just lost in Vermont yesterday. So the idea was that we were going to have Vermont be the first state to legalize through the legislature, because we passed the state Senate back whenever that was, in February. The governor is great. He would have signed any legalization bill that we put on his desk. And all we had to do is get it through the House, and the House Speaker's even good. So what could go wrong, right? Well, unfortunately, the majority of the House actually didn't want to pass our legalization bill. And even though the governor and the Senate was lobbying them, they said no. And we couldn't even get a watered-down bill through yesterday. We couldn't even get a watered-down D.C. kind of grow-your-own personal possession bill. We got nothing yesterday, and now we're dead for the year. So this is a problem because the governor is retiring at the end of the year, which means we have to start over not only with a new legislature in January, but actually a new governor. We don't even know who the governor is yet. So Vermont went from being the most likely state to legalize next to not even being in the top 5 or 6 states because of what just happened yesterday. Rhode Island is the only state still alive that could legalize through the state legislature. The governor is pretty good, and we are doing a full court press to try to pass it. In Rhode Island, the way it works is that if the committees in both the House and the Senate schedule your bill for a vote, that means you already know you're going to win all the way, because they won't actually allow you to get out of committee unless they know it's going to look good for you on the floor of the Senate and the House. So if there's something that happens in Rhode Island, it'll all happen very quickly. The deadline is sometime, I think, in late June. And it's tough to say. I'd say our chances of success in Rhode Island are less than 50% right now. We have a lobbying effort there, but we're not really hammering the legislature in a muscular way. We're kind of doing a moderate campaign right now in Rhode Island. And if we fail this year, we're told by the legislators that they're going to push us through next year. So the 5 initiatives are the ones that get all the attention. It's the shiny thing in the room. So Arizona, so this is in alphabetical order. Arizona is the state that people find to be the most complicated and difficult because the prosecutors have organized against us. And if you want to know what the face of the opposition looks like, it's that face. So she's a prosecutor outside of Phoenix, and she wakes up in the morning wondering what she can do next to put marijuana users in jail. And in fact, she and her people came out against our initiative before we had even drafted it. So that was kind of weird, but nevertheless, we have the advantage because we have public opinion polling on our side. And we also are doing a good job with raising money from the medical marijuana dispensaries, because if we are able to legalize in Arizona, the medical dispensaries convert into legalization. So they have a financial incentive, and we're donating a lot of money because if we win in Arizona, that'll obviously be a big splash because it's a conservative state and everyone knows it. So Arizona is looking actually pretty good right now in terms of fundraising and polling, which I can't say for most states. Maine, the government tried to block us from the ballot. You know, with every election cycle, we have to sue someone, and this time it was the Maine government. And we sued and won, so we will in fact be on the ballot in Maine, despite news stories that you might have read about a month or 2 ago. And so the polling in Maine is actually a little bit better than what you see on the screen here. So I'm actually feeling a little bit better now about Maine. We're on the ballot, the polling's looking good, and the opposition in Maine will not actually be very well funded at all. Also, I cannot say that about most states. I think in Maine we might have something like a clean shot at legalization if we can just run our own TV ads. I think we could push it over the top. Massachusetts, that was supposed to be the easy state, but there's a wall of political opposition against us. There's the governor and the House Speaker and the mayor of Boston, who's sort of like a governor, and the state attorney general, which is no surprise because prosecutors are almost always bad on this issue. And so we have a wall of opposition. Now we're used to politicians being against us. In Colorado, where we ran that campaign in 2012, the current governor and the two former governors all were against us, and all three voices appeared in radio ads in Colorado in 2012. We didn't really care that much because what we really care about is whether they have a lot of money for ads. You know, it's sort of like what's the sound of a tree falling in a forest if no one's there to hear it? You know, what does it sound like if three governors are opposed but they're not on TV? So in Colorado we were able to win because they didn't have a lot of ads. In Massachusetts it's different, and if you have any interest in Massachusetts, you should be very concerned right now. The folks on our side are not stepping up to the plate. The industry is asleep at the wheel, and the governor and the mayor of Boston are actually not only opposed, but they're raising money. They started up a campaign committee, which has never happened before. And they can raise unlimited corporate contributions for their campaign committee as we can for ours. So you should be very nervous about Massachusetts right now because the industry is MIA. Nevada. Polling is actually even better than what it shows there. I've just looked at the recent polls and it seems to be trending slightly upward. So that is it's a major campaign. The opposition is going to have to be swimming upstream to try to get those numbers down to cause the initiative to fail. And there's an announcement I think that's happening today that is going to announce that there's a sufficient number of signatures that has been collected. That announcement's happening in the Bay Area today, at least last I checked my email. So medical marijuana, I'll fly through this more briefly. So this is the medical marijuana map, which is getting pretty crowded. So 24 states are black. Those are the states with medical marijuana laws. 22 out of the 24 of those have some kind of distribution system, and the two leftover states are Montana and Michigan that don't have a real distribution system. But the most recent state that you may have heard about was Pennsylvania. So that's the 24th to come online, and that was a state that my organization participated in combination with mothers with epileptic children, and it was really the moms who led the way, and the legislators at the end sort of just took the path of least resistance. It was easier for Republicans to vote for medical marijuana than it was to have the moms take over their office. So that's medical marijuana in terms of what's on the books, and then in terms of initiatives and bills, the four initiatives that are getting the attention are the green states. So Ohio, the polling is great. Florida, the polling is great, but you need 60% to win. Missouri, the polling is great. The signature drive is supposed to conclude this weekend. I don't know if they're going to do it, but I hope that they do because the initiative is good. And Arkansas, we will certainly get one question on the ballot, and unfortunately there might be two initiatives on the same ballot. If there are two medical marijuana initiatives on the same ballot, that means they both fail. And that would be a very big embarrassment for our cause, that there's money spent to put two questions on the same ballot for a policy of mutual self-destruction. We're trying to negotiate that with Adam Bierman from MidMen, and it looks like some people are just too pig-headed and they want to move forward knowing that they're about to jump off the cliff and spend $500,000 or more doing so. So Arkansas makes me sad. We'll see what happens. And then in terms of the red states, those are the states with medical marijuana bills in the state legislatures. There's only one state that's still alive, which is Louisiana. So that's happening this week and perhaps next week. And we're camped out in Baton Rouge right now, lobbying and testifying. And we have a chance at having Louisiana be the 25th medical marijuana state. I don't know what our odds are because we're completely not funded there. We're just doing this almost for free. If we win there, it'll almost be by accident. And if we don't win this year, it would be next year. The other red states have already lost, and so that was particularly tragic in Nebraska, where we were 3 votes short of getting the bill through the legislature with a veto-proof majority, supermajority. So in Nebraska, we had a real shot at making that a medical marijuana state this year, but we weren't able to put it together. So you'll see that the red states are really, other than Louisiana, the other 5 are really there to represent what we're going to be doing next year in those state legislatures. That's the governor of Pennsylvania who signed the bill. He's great. He's totally on our side, and he'll sign more bills if we can get more bills to his desk. There is another thing that we might have to do in some states, which is that if we can't actually get around the governor, we might work with state legislatures to put questions directly on the ballot. If you put a question on the ballot through a referendum process, there's 2 advantages to that. One is you don't have to collect signatures because the state legislators do it for you. And you also get to avoid the governor entirely, which is usually good because almost all governors are bad on this issue. The bad news about doing that is you can't control it. So the legislators could put a bad medical marijuana bill on the ballot if they wanted. So it's kind of a risky game. So in my professional opinion, I think Ohio is the most likely to pass of the 4 medical marijuana initiatives. Missouri is second. If they get on the ballot, I think it's pretty clear it's going to pass because I don't think there's going to be real opposition. Arkansas is now a lot worse off than it was a couple days ago. And Florida, as you know, it got 57.5% in November 2014. And the reason it failed is because the good guys were outspent by the bad guys. So if the good guys can actually have the financial advantage, then Florida would in fact become a medical marijuana state this coming November. It's the only state with the 60% rule. Otherwise, Florida would have legalized medical marijuana a long time ago. So that's the quick whirlwind tour of the country. So we talked about state bills and state initiatives, legalization, and medical marijuana. So covered all the relevant stuff about states. And don't have time to talk about federal legislation, but if you wanted to pick my brain about banking or the 280E tax problem or rescheduling or anything else under federal law, I will be here for the rest of the day and also for the reception. Thank you very much.
Good job. That was incredibly informative, and I think it's positive for the nation as we see slowly but surely we're marching forward. And of course, the nice thing is with the distraction and all the craziness in the GOP, that hopefully they won't be able to focus just on that. Now, up next is we're having a panel. So I'm going to step up here. And so if we can get Michael Weiner to come to the stage from the great firm of Dorsey & Whitney, who's been a big sponsor of this. And then with him comes, I'm going to make sure I say this right, Luke Stanton, managing partner of Frontier Law Firm and Sky Capital Partners. And we'll put you up here and we'll hand you, oh, you already have that, perfect.
That way I can tag team you. Are we on? Oh, okay. Hello? Everybody can hear me, I assume, even back in the cheap seats there. So, in any event, we're really happy to be here. It's kind of a unique spacing for me. I mean, I speak on a lot of legal panels, and usually they stick us at 5 o'clock in the afternoon when everybody's left because they don't want to hear about legal and compliance. But the beautiful thing about this asset class is that legal and compliance is an incredibly important part of it. So what we've put together here is a panel of experts that will hopefully help you not only get an oversight of what's going on in the state and federal legal realm, but also maybe dispel some common misconceptions about the cannabis business. Now, the bad news about it is I don't really know anything about cannabis law, so I'm not sure what I'm going to help you with. But the really good news is that I'm here with two colleagues that are experts in cannabis. The reason I'm here is I am an SEC enforcement attorney by training, and I advise asset managers on how to have regulatory enterprise risk management systems in place to effectively manage people's money. And the cannabis space is a very important space for asset management. And I think for any asset manager that's going to embark on taking in investor funds, they need to start first by building an institutional organizational base and then approach the business they're in. And certainly cannabis, being a very legal and regulatory intensive business, demands a whole separate set of organizational infrastructure. So I have fortunately been able to get involved in the cannabis space because of my expertise in that regard. But
I think there's been some misunderstanding. We were told you were the expert.
Oh, shit.
Luke and I were.
That's what I thought.
Well, the good news is I can talk about anything. So I will.
Okay.
I'm more than happy to. I've been. Last night we had a cocktail party at the firm I work with, Tress, and I learned a lot actually. Okay. So I can share with that. But
so Luke and I can go eat lunch now?
No,
yeah.
No. In the meantime, I've got with me here Michael Weiner, who's a partner at Dorsey & Whitney, expert, allegedly, although we'll find that out. And then I have Luke Stanton, who's the managing partner at Frontiera Law, who is going to be really focused more on the California side of things. But I'll start just initially on kind of the general mandate that I see for regulatory enterprise risk management for anybody who's investing in an asset class, much less a asset class as complex and fluid as cannabis. And for anybody who's followed finance over the last 7 to 8 to 10 years, obviously things have gotten much more challenging. 2008, the world came to an end. Everybody lost all their money, and all of a sudden, the governments of the global economies decided we need to have our finger on the pulse of what people are doing with their money, and they created a set of regulatory guidelines through Dodd-Frank, and in Europe through something called AIFMD, to really require asset management firms to have, as I say, regulatory enterprise risk management. And that really is policies, procedures in order to help them run their businesses, have third-party auditors, have third-party administrators, ensure that the investor's money is getting some gatekeeper oversight, but also ensure that the people who are managing the money are actually putting in place infrastructure to deal with their business. And in the cannabis space, I think that it's very important to have that infrastructure. And I guess the one place that really screams out at me is when you're investing in cannabis companies, because there is no shortage, as everyone in this room probably knows, of deal flow, as they say in our business. There's no shortage of companies in this very burgeoning business that need capital. The challenge is to identify companies that you are comfortable putting other people's money in, much less your own, that have the ability to capitalize on this very exciting and very fluid growth opportunity and can execute on their business plan. Now, that's not rocket science in the investing business, but when you're developing infrastructure to do that, you need to have a deal flow, you need to have workflow, you need to have appropriate experts on your team so you identify the issues that come about. And I think that that is a prerequisite these days to running a successful business. There are certain hot buttons that the SEC looks for when they're talking about an asset management firm. And by the way, just to keep in mind, you don't have to, and frankly are not allowed to be registered as an investment advisor with the SEC until you have $150 million of assets under management in a pooled vehicle or private fund. If you're just managing people's assets as an advisor, it's a lower number. But in my view, and in Trust Capital's view, who I'm working with, it is essential to assume and act as if you are registered, because the bells and whistles that you put in that type of infrastructure are going to not only check the box that the regulators won't be concerned about you, but they will help you generate alpha, as we speak in the investment business, and help you run your business. Because the problems that occur in any business is when you have lapses in your enterprise risk management, when you don't follow the steps that you put, and you don't invest in the right companies, you don't oversee those companies, you don't make sure you hire experts to ensure that you or your companies that you invest in are violating laws, or frankly even getting to appear that they violate laws. And the last thing I'll leave you with is, when you start your career as I did as an SEC enforcement attorney, you really get sensitive to where the line is. And everybody is always talking to you about, mainly when you say you worked at the SEC, they want to talk to you about insider trading, because that's the easiest one. And they'll give you an example of, I'm in an elevator and I heard some guy say, and what do I do? And putting aside the facts, I leave you with this. I really believe that if the line is here on what the law is, you want to be back here, not right at it. Because when you're at it, you're drawing regulatory scrutiny, you're drawing institutional investor scrutiny, and that scrutiny can in and of itself compromise your overall business. So running your organization by saying, I don't even want to have the appearance of impropriety in the way I operate, I think is a good rule of thumb. And with that, I'd like to turn first to Luke, since we are in California. And just for me, if you could give us kind of a short update of maybe the status of legalization, and then if you could talk somewhat about the banking issues that I think everybody is interested in, because we hear that you're not allowed to bank and that you have to bury your money in the ground when you get it. So
Bank of the Woods.
Yeah, Bank of the Woods.
Hi, guys. Thanks for having me. Noah, thank you for having us all here. So I think it's always helpful to just do a brief overview of the history of marijuana in California, because, if you listen to estimates, we're looking at potentially being 49% of the global economy currently. We're looking at as much as 80% of the country getting their marijuana from the state of California in one way or another, whether they're supposed to be or not, and of course they are not. So 1996, we had the Compassionate Use Act, one of the first states, the first state in the country to have any sort of program like that. That gave us an affirmative defense, patients, an affirmative defense to possession and cultivation for use for themselves, right? Very limited. That changed in 2003 with the Medical Marijuana Program Act. That allowed for collective cultivation and possession and distribution within a closed loop, not-for-profit group, right? So you hear the word collective thrown around a lot in California. That comes from the statutory language relating to collective possession, cultivation, distribution, all of these activities that really launched what is the sort of modern cannabis business today in California. And we've existed in this very gray area system since 2003. We started to see, businesses in, 2004, 2005, 2006, the earlier guys pop up. A lot of them came from the black market originally. That obviously created a lot of problems. And we've been working on figuring out how to unravel some of that mess ever since. Just in October, we finally passed the Medical Marijuana Regulation and Safety Act, which will, for the first time, provide for a statewide regulated system in California, state-level licenses, and real businesses to exist, to come out of this gray area, not-for-profit, closed-loop scheme that we have been dealing with for 13 years now. And that will not be implemented, and those state licenses will not be available until 2018. But one of the important requirements is that you are licensed or in good standing with your local jurisdiction in the meantime. So right now there is a scramble for local licensure in the state of California. And we've got groups coming to my firm from Asia, from South America, from Europe, from places all over the world, trying to come in and get a foothold and figure out how to get a local license to cultivate, process, distribute, sell at the retail level. And it's a very competitive environment. At the same time, you have a very interesting dynamic pushing against the ability to locally regulate. This really wonderful group here in California called the League of Cities, who works in conjunction with a number of law firms who over the years have made quite a bit of money going through the state of California, passing local initiatives and local ordinances and helping the sort of not in my backyard areas say, no, you cannot have any cannabis business within the bounds of our county, city, etc. And that has created this crazy patchwork all over the state where city by city, county by county, every place has extremely different rules, and there's just a wide variety of attitudes. Looking at LA County, for instance, LA County has 88 different cities in it, City of LA being one of them. That means within LA County, there's 88 different sets of rules that you have to follow if you want to do business here and follow the letter of the law. Some of these cities allow you to do business. Some of them patently say, absolutely not, you cannot do anything within our jurisdiction. Layered on top of that, of course, we have the specter of the AUMA, Adult Use of Marijuana Act, coming on the ballot in November of this year. And Rob, I missed your part on that. Rob's probably a better person to talk to about the chances of that. But it is, potentially going to create an entire parallel licensing scheme that they're also targeting to implement in 2018. And if you look at, the states that have passed recreational initiatives when they had medical already, that also creates problems. Trying to marry those programs or trying to keep them separate, trying to enforce different sets of regulations. And the Adult Use of Marijuana Act and the Medical Marijuana Regulation and Safety Act, which I think has been named the Medical Cannabis Regulation and Safety Act now, they have very different sets of rules. So we're looking at a state of 40 million people with two very different sets of rules potentially, trying to implement both of those at the same time. They're writing the rules and regulations now for the Medical Cannabis Regulation and Safety Act, and my guess would be that the regulators are going to do a tremendous job at making a mess of this whole system, and it is going to take a long time to effectively put together, and certainly when you look at states like Colorado, Oregon, Washington, where you're dealing with 4 million, 5 million, 8 million people rather than 40 million people, and you've seen the regulatory hurdles that they've had to overcome to implement a well-regulated program, it's going to be a Herculean lift here in California for us to be able to do the same thing. But for groups that are savvy and doing this in an intelligent manner and carefully getting in and getting pieces of that market share now is certainly very important. The other thing I want to say is we have this wonderful federal memo called the Cole Memo that was basically the federal government's reaction to Washington and Oregon passing recreational legalization. And one of the really important components of California passing a statewide medical regulation scheme last fall was that we now fall under the purview, at least arguably, of the Cole Memo. And at least one federal judge in the Northern District here in California has ruled in favor of a cannabis business and against the federal government. We also saw the federal government offer to, and it looks like it still needs to be signed, but offer to drop the Harborside lawsuit. So those are two really good pieces of news, I think, here for the criminal regulatory environment dealing with the feds here in California, because now that we have a well-regulated scheme, they can actually place us under the purview of the Cole Memo, which in the legal community, sort of widely considered that was written specifically to accept California from the group of states that received protection, because we have not, up until October of last year, had a well-implemented and well-regulated system. So that's the overview, and
I mean, I think that's very helpful, and I think that what I take from that, if you put on an investor hat, is not kind of fear, but excitement. And that may sound weird, but when you're identifying strategies to invest in, you're looking for arbitrages, and you're looking for arbitrages that have not been identified and that have upside. And the arbitrage here is really the legal regulatory dichotomy and the ability to identify the appropriate vehicles and companies that are going to be able to navigate and withstand and then flourish once things get to the point where, frankly, the arbitrage comes in and institutional investors and everyone else is investing in this business. So what I would say is that identifying the issues, employing the resources with the expertise, and then deliberatively trying to identify these companies is what you want to do when you're investing in this business. And before we move to Colorado, if you could just, in a simple way, if that's possible, give us a little bit on this banking situation.
Right. So banking situation remains difficult, one of the largest problems in the industry, and this applies whether, frankly, you are a completely ancillary service provider, not touching the plant in any way, shape, or form, or whether you are, a cultivator or a dispensary or one of these groups that is really working actively in the primary sector. We've had media companies get shut down because they're producing cannabis content, and the bank decided that for whatever reason that was too risky. They had cannabis sponsors, they don't trust the money that's going into their accounts. The bottom line really is that the banks are not ready to foot the bill for the compliance necessary to bank the industry. FinCEN and the Department of Treasury released a set of guidelines. There are a number of banks and bankers and different groups who've been looking at how to follow these guidelines without the compliance requirements being too onerous. But the bottom line is right now the banks have the ability to follow the constraints of the federal memorandum on this topic, but they are not yet willing to take all the time and go through the due diligence process and the compliance process necessary to bank the industry without what they feel to be risk. So at some point, I think that we will see the types of revenues being generated that will, in the same way that we've turned around local governments, state governments, and others to see cannabis as a benefit. I think the banks will see that when the bottom line is attractive enough.
All right, thanks. Colorado, which has a much larger regulatory scheme and I guess a much more mature one. If you could share with us that.
Sure. So I'm with Dorsey & Whitney. I'm head of our corporate group in Denver. We have 19 offices, including offices in Washington and Alaska, and we came into the industry as it was legalized in Colorado because, like many law firms, we go where our clients tell us to go to. And right after legalization, we got a call from our New York office saying somebody wanted to invest in a facility in Colorado that was going to grow marijuana. So we figured we better start learning about it. Which we did. And then there was a second call from New York for another deal, and then so on and so forth. And then we've started representing companies in the area. We've focused mostly on corporate transactional work rather than regulatory work, permitting and filing of licenses. We've instead focused on financing, acquisitions, distribution agreements and the like. We found that that's been an opportunity for us in the area, which is different than some of the other regulatory lawyers in the state. It's been a lot of fun. We've worked with companies in a variety of different areas, growing, synthesizing, distributing new products, maybe products that that will be used with marijuana and the like. And of course, investors. We follow where the money comes from. It was very interesting. Right after Washington legalized, we got a call from one of our partners in Washington, one of the most patrician guys you can imagine. And he was a little flummoxed because a large client of his with $5 billion wanted to get into the growing industry. So he is now a marijuana lawyer. That's what you do when your $5 billion client wants to get involved. Who would have thought? So we're not as worried about legalizing. We're focusing on the issues that come from being legalized, regulatory issues we have. The very first one we had to deal with was edibles and the packaging of edibles. There were some high-profile incidents. Whether those were directly caused by edibles or not is unclear. But that led to packaging regulations. Then we had issues regarding how could people from out of state invest other than a loan into companies in the state. And that led to permitted equity interests, essentially options to purchase equity in the future if one became a resident or the resident restriction was thrown out. Currently, it seems the issue du jour locally is on pesticides, regulating pesticides. We've had a recall, which allowed us to call somebody in our firm who it turned out knew lots about federal pesticide regulation and now is involved in state regulatory pesticide recall issues. So it's brought a lot of different issues in our firm to bear. We've also been asked a lot to segue into banking. We've been asked about ways to legally bank in some way, shape, or form without actually banking. Dorsey is a traditional banking firm. We started 100 years ago representing what is now U.S. Bank, and we continue to represent them today. And in looking at all these ways of moving money around or banking or credit card processing, we've yet to find anything of interest or that really does legally solve that issue. And going to your point about trying to stay not up to the line, but maybe a little bit farther back, it seems like a lot of folks are willing to move a little bit closer to the line when it comes to banking and credit card processing and the like. It just seems like that can only end badly. We were recently asked by a client to look at somebody who professed to do credit card processing. There was nothing about it that seemed legit to us in any way, shape, or form. And so we advised them not to be involved.
It's interesting because I was speaking in terms of the arbitrage, but there's also something called regulatory arbitrage, and I think that's a losing trade. And that is, kind of taking what is the expectancy on the trade, on the investment, versus the likelihood of getting busted. And if you balance that and say, well, I'm going to make a lot of money, I should do it. My view has always been that's a very losing trade because the negative expectancy of even being investigated is so hard to quantify, and it is so all-consuming that I don't think that you can take that risk. So what is an example, because like you said, you're a corporate lawyer who has now become a dope lawyer, so to speak. So what are some of the things that you've had to work into kind of the deal docs to account for some of the issues that we're all facing, like the banking, that might have been different from other deals that you had done when you're, and I don't know whether you represent the issuer or the investor, but you probably do both sides.
Both. So the main issue that we worry about is that if somebody owns or is likely to own an equity interest in a marijuana business or a licensed marijuana business, today, they can legally own it. Today, they have a license to own it. But what happens if something goes wrong? They break a law, or perhaps they move out of the state of Colorado, or they want to give it to their children, or they die, and their children who don't live in state inherit their equity interests. So we've actually had to write into our organizational documents a lot of what ifs for those, because we actually can't have an out-of-state resident or a bad boy own a piece of our business, so we have to get them out in some way, shape, or form. That's been the biggest one. And then on the permitted equity interest, we've had to take our options, our warrants, and the like, and then build up the exercise requirements. When would people be able to exercise, and what would that look like? And then third, we had to modify our loan documents, specifically our secured loan documents. There's a lot of question about how much you can actually ask for if you're giving a loan, as far as normal, what I think of as normal bank covenants, but perhaps Med would think is managing or controlling the business. Many we take for granted on the banking side, but when you're an investor who's not allowed to own or control the business, you don't want to look like an owner, which means that your loan looks a little bit more naked, for lack of a better term. On the banking side, by the way, there are some banks in Colorado, local banks, who are doing banking and are passing through the cost that Luke mentioned for filing SARs and the like, so that they can bank those businesses, and those businesses are paying roughly $2,000 a month for normal banking services.
No, it's
few and far between. It doesn't handle the credit card processing, and I'm not aware anybody's gotten a bank loan, which is really another arbitrage opportunity, which clearly the investors are looking at. Many of the Colorado businesses are people who would just like a working capital loan. I want to build a grow facility. It's not that big. I need $1 million of equipment. It's like opening a restaurant.
Right.
So, but rather than going to Wells Fargo and getting $1 million bank loan, I have to go to a family office or private investor and get $1 million bank loan. Instead of paying 5% or 7%, I'm paying 19%, and perhaps with an equity kicker, and perhaps with a management fee on top of that.
It's thanks. I appreciate that. So I had some other issues that I was going to have us cover, but I'm getting a sign like it's the Academy Awards, and since I have no clout, I don't think I can override the timing. So I wanted to leave a little bit of time here.
There's no orchestra.
Yeah, I wanted to leave or a teleprompter, or I wanted to leave a little bit of time for questions in case anybody had any, and we'd be happy to answer them if there was anybody who had any questions. Otherwise, we'll just kind of follow up with a little bit more information before our time is up. So I don't know.
I've spoken to a number of people exploring that issue in various ways, shapes, and forms over the course of the past couple of years, and I have never found anybody who has effectively implemented that at this point in time. I don't pretend to be an expert. We looked at bringing on somebody to our firm who specializes in cryptocurrencies, and ultimately I think it didn't make sense. Maybe that'll be something that works out someday from my perspective, but frankly I'm not myself an expert enough in the cryptocurrency realm to say what the horizon looks like. But just to say that I have seen quite a few projects or ideas or things launched, and I haven't seen any of them work out.
And just on a day-to-day basis, it just doesn't solve any of the problems. People in this room, we don't have bitcoins or cryptocurrencies. We want to use credit cards. So that's number one. You want to pay your vendors. These are maybe small vendors. You want to pay them in a check. It handles maybe some of the bigger issues, but it doesn't handle the day-to-day, which is really the stuff that drives people nuts.
Michael, you said that in Colorado there are different ownership issues with regard to direct ownership in companies. Is there anything which prohibits other investors around the country from investing in a fund which then takes positions in those companies?
Yes. So Colorado looks through to the ultimate individuals.
What was the answer?
Yeah, Colorado looks through to the ultimate individuals. So
California does not.
not aware.
Does not currently. Those rules and regulations on ownership are being written. Right now, it looks as though less than 5% ownership in a licensed business is not going to require individual disclosures to the level that it will for the principals in those licensed businesses when we have licenses in 2018, at least under the medical regulatory regime. But the detailed regulations are being written up in Sacramento right now, so we don't have a firm answer on this. I'm sure that when January 1st, 2018 rolls around, we'll be doing quite a bit of corporate restructuring work and ownership restructuring for our clients who do want to apply for licenses at the state level. Yeah.
Any comments about the proposed 18 individual licenses, or just, what have you, business by January 1?
I'm sorry, I just couldn't hear you.
Could you stand up when you talk?
Purportedly anywhere, from my understanding, there's going to be 18 different licenses that we may need some, we may not all, and
Well, 18 years.
License types, right, license types. And
we've got one for ITO in Los Angeles, covering everything, right? So now you've got one for delivery, one for dispensary, one for grow, one for infusion.
right.
I saw 18 different schedules.
Right, well, the supply chain will basically be chopped up into 6 main different portions: cultivation, processing, lab testing, transportation, distribution, and retail. Some of those license types can go together under a common ownership. Many of them cannot. Fully, I think 11 out of those 18 are different types of cultivation licenses. So saying that there's 18 is a little bit, yeah, I mean, it's accurate at a technical level, but in terms of which parts of the supply chain you're splitting up, it's less than that. But
So here's the total regime by the unit.
sorry, say that again?
I said what you're saying is a total regime. I didn't really quite.
Oh yeah. No, so it's a little bit more simplified than that. There are a bunch of different cultivation license types for indoor, outdoor, mixed use, and different sizes as you go up from smallest grows, which are under 5,000 feet, to the largest ones, which cap out at 22,000 square feet of canopy currently. Either.
And I
That's
think
your maximum size, 22,000 square feet.
we're seeing our types of licenses expand because we started out, with I think 3 different licenses, and then as we realized we need another ownership class, we added 6 more or 3 more
Right.
type of people, and then we still have some question about certain people who are touching the plant who aren't really part of the supply chain, and whether we think they need to be licensed, but there's no different license for them. It'd be interesting.
For California now, between now and 2018, California now considered regulated, or because of the regulation is still subject to the
Yeah, so the statute's been passed, and as I mentioned, at least one federal judge has used California's recent implementation of the Medical Cannabis Regulation and Safety Act to side in favor of a cannabis business and against the federal government, which is a big step in the right direction. I don't think it is the cataclysmic event that a lot of people in the cannabis industry want it to be. But there's another factor that's really helping out, which is the Rohrabacher-Farr Amendment, which has defunded the federal government's efforts to get in the way of states implementing these well-regulated cannabis regulation schemes. So when you're looking at the combination of the Cole memo, the passage of the Medical Cannabis Regulation and Safety Act in October, and the Rohrabacher-Farr Amendment, that's a pretty powerful combination of things. And I think that whether all federal judges in all 4 districts of California, for instance, would look at it the same way, probably not right now. The Northern District is progressive, San Francisco, Oakland being sort of the centerpiece of that in the cannabis industry in that part of the state. But I think we're moving in that direction, and I would be surprised, particularly with the federal government dropping this lawsuit against Harborside, I'd be very surprised to see excess federal interference as long as you're not breaking those tenets of the Cole memo.
The U.S. Attorney in Colorado told us that they really don't have interest in going after permitted marijuana businesses. All of their marijuana prosecutions have been after the type of businesses that you would expect. Folks growing in national parks for export to other states. And then folks the best ones are folks who posed as permitted businesses, put signs up and just hope nobody would notice. Those they've gone after. But they've not been going after permitted businesses.
Well, hopefully we enlightened you some and hopefully cleared up some things, but we'll all be here, I assume, all day. And we're happy to answer any questions, but we appreciate your time and enjoy the rest of the conference.
Let's make sure that you're in the networking break in the cocktail hour this evening. Ruth, Gary, and Mike all have incredible insight. Do not feel shy to ask them questions. And use today as a chance to meet people that you may not already know who can enhance your knowledge. Now, on this great opportunity where you've now kind of dug in and you realize, wow, some regulations, some opportunities, but for the beginning of every industry, there's always a chance for a huge upside. So talking about where these opportunities are, Matt Carnes is going to be our next panelist. So come on up. And with him will become, Matt is the founding and managing partners of Greenway Advisors. With him is Asher Trope, CEO and co-founder of Trust Capital, Adam Behrman, CEO of MedMen, and Brendan Kennedy from Seattle, CEO of Privateer. So let's give them a round of applause as they get ready. We hope you enjoyed your lunch. Please, at the end of the day, make sure you thank your servers because they've been working hard. Okay, ladies and gentlemen, we'll turn it over to Matt. And here's your pathway to learning more about the opportunities in the industry. Ladies and gentlemen, Matt Carnes.
I'm Matt Carnes. I'm the founder of Greenway Advisors. We provide financial research and analysis to this industry. By way of background, I am a former Wall Street equity analyst. I worked on the sell side and the buy side. I also served as a auditor for Pricewaterhouse, so I have a pretty diverse financial background. And about 2 years ago, it really clicked that what this industry really needs is somebody to really step up, roll up their sleeves, and try to understand the size of the industry. So that's what I've been pretty much doing for the last 2 years, understanding the dynamics that have been unfolding, really putting on a forensic hat, trying to make sense of the states, the state reporting, and trying to really put things on a normalized basis so people like you will understand the industry and the size and the potential. So with that said, I have a few questions. I'd like to turn it over to you guys to first maybe introduce yourselves and talk about your firm.
Sure. My name is Asher Trope. I'm the CEO of Trust Capital. We're a fund management firm solely based in New York, solely in cannabis. And my partner and co-founder, David Hess, here is our in-house industry guy, and I'm the capital guy. My background is spent about almost 15 years as an equity and equity derivatives portfolio manager. And here we are.
I'll just start by saying that we sit on a lot of these stages. This is probably the most impressive stage I've sat on to talk about investing money in the space. And it's a small group, but you guys are in for a treat. I mean, these guys are the real deal. He's obviously very much the real deal. So, and I just try to hang around. So whoever put this together did a good job. We have, I'm the CEO of MedMen, co-founder of MedMen. We're a management company in the space. We've been in this industry since '09. We're the only management company currently operating in legal cannabis. And this week we've also announced, which I'll be talking about later, the first 9-figure fund in the history of legal cannabis. So very involved in all aspects, operationally intensive, focused, while also deploying capital directly into the space.
My name is Brendan Kennedy. I'm the CEO and founder of a company called Privateer Holdings. We founded Privateer about 6 years ago. We've raised a total of about $82 million to date from investors all over the United States and around the world to invest in this industry. We have 3 primary portfolio companies, Leafly, which provides information on cannabis to people around the world, Tilray, which is a medical cannabis brand, and then Marley Natural, which is a lifestyle recreational brand.
Okay, good. So I think it's important to really talk about where the opportunities are in the industry. And so what I'd like to sort of gain an understanding of what you guys think are the most attractive subsectors within the industry, and where would you deploy your capital in areas that you're not in right now, I would say. Awesome.
Who wants to start?
Yeah, go ahead, Adam.
Well, it's not hypothetical for me. I mean, we have been deploying capital. We spent our own money, and we've also spent a lot of investors' money, especially as of late. I think the question was, where would we be putting our money if we weren't putting it where we already are?
Yeah, that would be.
Well, if I wanted to put it there, I would have been putting it there. I mean, we're putting our money where we want to put it. I mean, our take on it is that we want to be in the space, and I think that's different than your take on it. So it'll be interesting for you guys to hear both sides. But for us, it's about being direct in the space. It's about the universe that is growing manufacturing and selling legal cannabis, specifically focused in the U.S. with some carryover into Canada. So there's an argument that is made about picks and shovels and ancillary businesses and brands. They make the best argument about brands, I think. For us and our focus, we believe in the core business, and the core business is, again, growing manufacturing and selling cannabis. It's tricky. It's a lot trickier than dealing with the ancillary businesses because of the fragmented regulatory nature of things. But you guys are all investors. You understand with the trickiness comes the opportunity. And so that's where we've been spending our time, money, energy.
This year we'll raise at least as much as we've already raised. We'll deploy somewhere north of another $80 million. We'll deploy more than half of it outside the United States. That's really an interesting opportunity for us right now. I spent a lot of time last year outside of the U.S. visiting different countries around the world. Most people have this perception that this is a phenomenon that's taking place in the Western United States. That's just not the reality of it. Canada will be the first G7 nation to have a national recreational program. It was the first G7 nation to have a national medical cannabis program. Looks like Germany will be the second, followed by Italy, although those two may reverse the order. Italy may be second, Germany third. Looks like sometime around November, Australia, roughly 40 million people will have access to medical cannabis similar to the program in Canada. So we're really interested in opportunities around the world and have employees. We have about 275 employees, more than half outside the U.S., Canada, Australia, Germany, Spain, Czech Republic. So looking at different programs around the world, and then looking across information, medical and recreational, with a core focus on brands. Anything that people can put in their hands, that's important to us. Our fundamental thesis is that cannabis is a mainstream product consumed by mainstream people around the world. That because of that, the end of prohibition is inevitable, and that brands will shape the future. And so we just invest in brands.
Yeah, we take a diversified approach to the industry. We believe there are a lot of unknown unknowns, and based on the demand we get from investors, they want to see a diversified approach to mitigate risk. We have a focus on the pick and axe players, infrastructure. So you guys are the first to hear about a strategic partnership between us and SC Labs, a leading laboratory testing company in this country. And we'll be hitting as well the international side, probably first in Canada and Israel. And we'll be following up with other fund launches. Right now, we launched a fund that takes that diversified approach as a foundational one-off way to get into the industry now and hit on all the different areas. And then we'll follow that on with specific niche funds, right? We get a lot of demand from investors for real estate. There are people that want to get in the space, they see the opportunity, but real estate is the way that makes them feel comfortable. We get people who specifically are focused on the desire to do good and to make medicine, and these people specifically want to work on clinical trials. A lot of opportunities out of Israel and that stuff, so we'll be launching a life sciences fund as well. So the fund management approach is where we are to offer the access to all the different opportunities that are attractive and comfortable for the different investor channels. Those being the retail, high net worth and family office, and institutional.
All right, let me ask this a different way. Conversely, what areas would you stay away from where there's, arguably the business will either become irrelevant or less significant when laws change, with perhaps no terminal value?
Yeah, I mean, the areas of, let's say like the credit card processing that was being spoken about before, that's an easy one to hit that everybody talks about. If the banking issue clears up, well, people that are trying to figure out a solution to the payment issues, what are they going to do, right? I believe Brendan's involved in something in this area. Brendan has a lot of experience in the banking area, so Brendan is well positioned to talk about that stuff. But I also think that along with the legalization that's coming along on the federal side, as it does, so much money is going to pour in to all the subsectors that even angles that you wouldn't think should thrive will thrive for a while, just like in the dot-com era, right? But the question is, where are the true engines, right, versus the shiny red paint? There's a lot of shiny red paint, and there are not a lot of true engines in the industry. And it's our job to find those true engines. On the retail front, dispensaries, production, that is an area, there's a lot of crowding in that area. There are the players who very much know what they're doing and are focused on that spot, like Adam there. So we, for instance, are in discussions occasionally with Adam on topics like that.
Go ahead.
If I could figure out a way to short the indoor grow facility market in Denver, I would.
Yeah.
Yeah, that's an obvious place where I wouldn't invest. It's a race to the bottom. It's a commodity-like product at a certain level. There's no reason that cannabis should be $2,000 a pound. We're seeing that already in Washington State, much more dramatically than Colorado. But I can go to Jamaica and buy a pound of cannabis for $100. I can buy it for $25. Not a very good pound for $25, but you can still buy a pound for $25. And that's ultimately where this market is heading. So for us, we're not interested in investing in indoor grow facilities. Ultimately, in the future, this product will be grown outdoors. Some of it will be grown indoors. When I say indoors, in greenhouses, not indoors like a warehouse. And so that's probably the one area where I would not invest another dollar today.
May not be applicable.
Oh, it's very applicable. I'm just filtering myself.
Why?
Because I've been yelled at for the last 24 hours by everybody that I work with that I just did this up. Piss a lot of people off. Where would I not invest my dollars? I wouldn't invest my dollars in anything that looks like a free market. Thank God you softened the blow, because I was up in Portland with Rob talking shit about the state of Oregon, and I was in the state of Oregon, and that didn't go over very well. If I'm putting dollars to work, I'm not overly concerned about what I'm predicting is going to happen in 10 or 15 years. This whole world looks different in 10 or 15 years. I'm concerned about a very clear understanding of the regulatory regime today, tomorrow, 2 years from now, 5 years from now. You'll probably hear a common theme all day from me, and that is that if you're going to be in this industry, you're already invested in this industry, and you haven't given money to Rob Campia yet, you should be shamed. You shouldn't be allowed to be in this building. And he takes checks and cash and credit cards, and he's here all day. But it's very important, through groups like Rob's that are opening up new markets to understand what is happening. And you see a dichotomy. You see markets. I'm talking specifically about North America. But you see markets that look like free markets. We talk about Colorado. I wouldn't put $1 in Colorado. I wouldn't put $1 in Colorado, whether it was for indoor, warehouse or greenhouse or retail. I wouldn't touch Colorado. Why would you go touch a state that has 2,800 total licenses for an addressable market size? It's the 33rd largest state in the country. It makes no sense when I can go to a place like Massachusetts. They have 21 licenses for about half of that market, or you can go to a place like Nevada that's got a couple hundred licenses. So I would not put $1 in anything that looks like a free market. I'm not in a position to be excited about putting $1 in anything that looks like a brand play, and that's because, at least in North America, there is no real distribution. So I have no way to distribute brands outside of maybe a platform like our management company, but even then it's tricky. I don't like the idea of having to go cut deals with separate operating partners that hold licenses in different states and expect them to go maintain the integrity of my brand. I would put dollars only into restricted markets that have very low licenses to total addressable market, where I can go ahead and play within the moat that's been created. I think the one thing that I'll harp on is that unless you have a commanding understanding of the regulatory environment in which you're placing your dollars, you shouldn't be investing $1 regardless. Whether you believe in the brand thesis, whether you believe in the manufacturing thesis that we do, if you don't understand regulatory, you've got no business being in the game. And if you understand regulatory, then I think you can make educated decisions. I can't, the conference that we just came from yesterday, everybody was pitching their cannabis gum. They were pitching, I'm not making this up. They were pitching their cannabis mood enhancers. Like, what's the distribution strategy? There is no real answer after I've got a great way to make gum infused with cannabis. So, really understanding the underlying regulatory environment so as to understand the viability of the dollars that you're putting to work, I think, is of the utmost importance.
Okay. So there's a lot riding on this year's election, as Bob was talking about, and in fact, in our forecast, we anticipate a trajectory based upon the trajectory of states coming on board between now and 2020. We would expect $25 billion by that time. We estimate that 2015 we were at about $4.8 billion. So after this election, the perceived legal risk will probably be less significant. So what I'm wondering is if you think that valuations will come down, assuming a successful ballot initiative.
Right. I think first and foremost, and this is an amazing panel that was put together because we're coming at it from different perspectives, but I think it's important you're going to go that route. The perception of legal risk investing directly in the space, because I think you have to make the delineation, because the perception of legal risk investing in Leafly, for example, is a lot different than the perception of legal risk of investing in a grow facility in Reno, Nevada. So if you're talking about the election, are you talking specifically about the operational side of things?
I'm talking about both, because presumably there's a domino effect. So if there's any risk at the grow and if there's risk that will fail, then the ancillary businesses will, undoubtedly fall as well. So I think it's all tied together. So if you want, we could first start at the operational level with valuations. Businesses that touch the plant, would they be depressed after a successful ballot initiative, given the fact that there's less risk?
You want me to go first?
I could tell you that across the sector, we talk to institutional investors all the time, and the palpable feeling is that we're all sitting on a very tightly loaded spring. Okay, there is wide recognition of what the market looks like, what it may look like, the growth, the opportunity, but because of the regulatory and the legislative dichotomies, right? We have created this load, and the optics. We've created this loaded spring, right? Goldman Sachs, where are they, right? Where are all those players? They're not there, right? So, from what we're hearing, these guys, they want in. They see the opportunity, they sense it, but a lot of times their hands are tied behind their backs. And I think that as the federal government gets more comfortable, I think they will get more comfortable, and they're going to pile in, because that's how psychology works in the markets, in every market. It's just normalization. That's what's going on here, normalization.
It's a complicated question. I think over the short term, valuations continue to creep up, but ultimately they'll come down as more capital enters the industry. There's a scarcity of places to put capital right now, and so that's driving valuations up slightly. But as soon as there's a legal framework, or a better legal framework for this industry, I think you'll see more entrepreneurs enter the industry. I think you'll see more investors enter the industry. I think you'll see better teams, smarter teams, better strategies, and you also see competition from Fortune 500 companies, and so that will ultimately, I think, in the end, drive valuations down, where valuations in this industry will be much more similar to other commodity-based industries.
Okay. You want me to answer? I think that any perception of legal exposure, I don't think perception of legal exposure has any bearing on the valuation of any of these businesses right now. I think that the lack of ability for institutional capital to come into the space, to both of their points, is what drives the current value of things. To your point, the big boys want to play. You say you have the meetings. You've probably had the meetings. I've had the meetings for the last couple of years. They're in the process of figuring out how to play. They are not concerned whatsoever with legal exposure. They're concerned about the fact that their hands are tied because they have fund mandates and they've got legacy funds and they raise capital and they have to deploy it a certain way, and for them to go carve out a vice piece or for them to start something new and put it together to go deploy into the space, they can't move as quick as we can move because they're not as nimble, because they're 10, 20, $50 billion AUM funds. So I don't think it's a legal issue. I think that it has been a reputational risk up to a certain point. I think now that people are over that, I think the final moment for that reputational risk being gone forever is really November. Rob talked about it earlier, but for everybody in this room, like November, it's over for me. The way that I look at the world of we can go have this moment where, especially in family offices, you guys are nimble, you can move, it's your own capital. November happens, you've got 10 states all on the same day, voting on marijuana, and all the big boys are playing. I think it's great that we're talking about Arkansas. I love having conversation with the folks down there because I find it amusing to talk to them because I like their accents. I think it's endearing. But who really cares, right? We're talking about California, Nevada, Massachusetts, Arizona, Ohio. You're talking about all these states hitting on the same day. That whatever was being withheld because of a reputational risk or exposure thereof is gone. You can't afford to sit on the sidelines anymore. California in and of itself, if you talk about focus, we could just go play in California. We could just go play in Los Angeles and never do anything else the rest of our days and go create multi-billion-dollar businesses. So, yeah, I don't think it's legal. I think people have gotten over the legal. I think that the lawyers can talk. Luke actually is for full disclosure, is one of our lawyers, and he's amazing. He can talk you through all the memos and all the guidance. That's done. It's really a reputational issue, and then it's just speed at which they can move to go be in a position to deploy capital.
Okay. Well, let me ask you something. You're heavily involved. Your business is in consulting for licenses, correct? Within each state?
Well, our business is managing operations in the states, yes.
So my question is, as we get closer to the point, to the end zone, when we have federal legalization or changes to existing laws that will allow for interstate commerce, those states that implement a legalized marijuana market, closer to that point in time, valuations of those licenses, what's your take on that? I mean, is it even worth investing at that point in time because of interstate commerce?
Once we talk about full federal legalization?
Yeah, because if we're close, say it's 2020 and a state implements a program, say in 2019, then you really only have 1 year really to capitalize, and then it's sort of the game is over.
hopefully I'm living on St. Kitts by the time federal legalization happens, so I don't know, it's for other people to figure out. But, I mean, federal legalization, it gets talked about a lot. I'm not the expert, none of us are the experts. You would talk to Rob, or you talk to people like Rob about federal legalization. I don't think that's even being discussed anywhere as anything that's any kind of short or even midterm imminent. Is there anything you say about that outside of the fact that it's not on, I mean, full legalization from a business standpoint with everything we know, with all the friends that we have, isn't anything that's happening anytime soon. So I don't think it's about preparing for any type of full federal legalization. We talk about rescheduling, and you talk about the ability to go cross state lines and how that opens up commerce. You still have to deal with, in many of these states, again, I would put my money into regulatory environments I understand. It would still take a constitutional amendment within that state to allow for that to take place. Federal government can go ahead and reschedule it, but if the state of Ohio says that there's only a certain amount of people allowed to grow pot, and then there's only a certain amount of people allowed to sell it, and you have to sell it and buy it from the people that grew it in the state of Ohio, it doesn't really matter. So I think it's a further way off. I think just to be really succinct about the point on valuations change the minute that big institutional capital comes in, because they can afford to go roll up a bunch of things and pay what we see as a premium. But the truth is, in the real world of business, like, we're buying things right now, we're buying assets at 1 to 3 times EBITDA of the legacy operator. Like, where can you go do that as investors in any real world? You can't. Furthermore, the legacy operator is running it like complete crap, and we can come in and we can go, triple or quadruple the EBITDA right up front. So these assets are so unrealistically cheap that when you have institutional capital, there'll be some normalization. If you look up in Canada, where there's public markets activity, these things are trading at still forward-looking EBITDA multiples. So I think that's what changes when you start having hundreds of millions, if not billions of dollars being invested. They'll say, okay, we're going to go roll up the state of Ohio. We've got $250 million to do it. Maybe there'll be a more normalized multiple attached at that point in time. But I think that's what changes it. I don't think it's anything outside of just the type of money and the volume at which it comes in.
Okay. Yeah. Brendan, one of your investors, Peter Thiel, wrote a book, 0 to 1. It talks about the changes of a new industry, a new company emerging, and the shift in the paradigm. So my question is, obviously the cannabis industry is going from 0 to 1, but there are probably many businesses within the cannabis industry that are going from 0 to perhaps -1. So I guess my question is there any subsector where you've noted like a higher concentration of failures relative to others, and what red flags would you look for when you go to deploy capital?
Wow, that's a whole lot of questions. Anything involving cash management is a huge opportunity right now, but I'm not sure it lasts very long. Anything involving payment processing, I'm not sure that lasts long. Anything involving specialized security, I'm not sure that lasts long. Anything involving delivery, I'm not sure that lasts long anywhere in any state. Anything involving banking, anything involving specified nutrients at a micro scale, because the large nutrient companies are coming into the industry. Anything involving testing in the long term, I think that there's lots of testing companies out there, and you'll see national testing companies emerge. I don't know, I probably made a lot of people angry in the room, so I'll stop there.
Hey, you sit next to me, and then you can come walk out with me. Can I just piggyback on that real quick and then turn over? The way that I look at this is, people take all the details he gave you. Here's the global way to look at it. Just forget that it's weed for a second. When people start saying, oh, we're going to be the Uber of this, we're going to be the Yelp of this. Like, no, you're not. Yelp will be the Yelp of this. Uber will be the Uber of this. He talks about big, nutrient companies. Like, no, the big ag guys will be the big ag guys of this. One of our lawyers just sent us a thing talking about, I don't know, for those people that follow, Warren Buffett owns a company, and part of what the company does is make these racking systems, and now they're explicitly marketing to weed businesses. So it's like, we were at one of the guys at the conference calls himself the Warren Buffett of weed yesterday, and enrages me among other things. But no, you're not. Like, Warren Buffett will be the Warren Buffett of weed. So I think that's the way to look at it, and I think that is a very succinct way to not have him have to go ahead and make sure he hits all the boxes. Like, that's the answer, right? So if you forget for a second that it's weed, forget for a second that you're in this really unique opportunity where institutional capital isn't there yet and you get to go play, and just pretend it's the real world, then you can make a lot more informed decisions.
Yeah, I very much concur along the lines of what Adam just said. And I think also, when we talk about, the things that Brendan was just saying, of the various subsectors that we think are not sustainable, what I think it is that, whereas now we have an opportunity where perhaps 5 or 10 companies may be sustainable in this kind of environment over a period of time, when normalization and as normalization occurs, that will narrow. And a couple of key niche players in any area, the top one, the number 2, they can sustain, and the Fortune 500s and other companies come in, right? There'll be a lot of consolidation as the major banks come into play. They'll look to acquire the companies that have the market share in the various subsectors. And so that's kind of my take on that.
Now, you guys have, Brendan and Asher, you have different business models, but would you ever consider having your fund go public? Taking it public.
I think we're more focused on our portfolio companies and assisting in the strategic plans and creating opportunities for them, and that may end up being in the public markets. But we, as a fund management firm, we will be launching product that will be available in the public market, perhaps for retail investors too. The capital channels are untapped, right? 99.999% of the different capital channels aren't here yet, right? And so they need a home, right? And so guys like Brendan or Adam or myself, are creating homes for that kind of capital. Public side.
So, technically, we don't operate a fund. We're a private equity holding company. In order to maximize our return to our shareholders, we would never consider going public until after Prohibition ends. That's when a premium will be placed on companies that go public in this industry. And so that would be sort of the first requirement. The second would be, once Prohibition ends, I think you'll see a lot of Fortune 500 companies from around the world scrambling to get into this industry. And I think a lot of them will be willing to pay a strategic premium for professional companies and professional brands in the industry. And so that's our focus, building the most professional team, the most professional group of companies in the industry in anticipation of Prohibition ending.
Okay. And before I turn it over to questions, one final question for all you guys. Where do you see the industry in 5 years? I think it's going to look a lot different than where it is today.
Yeah. My answer? I have no idea. And if somebody tells you they know the answer, well, I'd really like to spend a lot of time with them. There's so many unknown unknowns. What do we know, right? We do know that if the capital channel's open, we know it'll look different, right? We know there's going to be a ton more competition. We know there will be bigger players. We know they'll do things on a larger scale. We know they'll compress margins, right? That's kind of my take on things. Yeah.
Go ahead, I don't know that answer.
I'll answer it a little bit differently. We think about this being day zero, right? This is the start. We started 6 years ago, and there were many, many weeks and months and even years that felt like we were too early, and we sort of kicked ourselves for that. And then at times it felt like we were too late. But right now is really day zero, and we sort of discount everything that's happened up to now in terms of this industry and from a business environment. And we're just at the start of all of this. And so that's how we think about the next 5 years, is we're going to see this industry emerge on a more professional level throughout the United States and around the world. And that's our focus. What it will look like, no idea. But we won't be at day zero 5 years from now. Probably also won't be, it won't look like a fully developed industry 5 years from now, but it's an industry that, the way institutional investors are thinking about this industry right now, it's a global growth industry that is likely immune to large variations in the macroeconomic environment. It might be countercyclical. It might look more like a vice industry. But there aren't a lot of industries that have that set of characteristics that you can invest in right now. And it's really different from a lot of other investment opportunities available around the world. And that's why we're starting to see larger private equity and venture capital and hedge funds look at this industry at this point in time.
I have an answer now.
Okay.
He just teed me up. All right. So I don't think that I have no answer as to what the world of cannabis, legal cannabis, looks like 5 years from now. I think that right now there's this, it's all kind of one thing, right? You have the gray market legacy side of it. You have day zero or day one of the institutionalization of it. You've got the medical component, which people have loosely talked about today, the pharmaceutical side of it, which doesn't exist yet, at least in the US. You've got the recreational adult use side of it, which I think more is what exists. So I think just picking up on that, the way that I look at it, is that there's this adult use side of things. I mean, I think it's expected that big pharma will come in and will end up controlling the pharmaceutical side of things, right? We see medicine as a certain way here in the US, and this medicine will look like that, and that's already taking place. I think that will be its own thing. I think that what we're all involved with today, or at least I can't speak for everybody, what I'm involved with today ends up being the adult use market. And it looks, to me, the easy way that people go is they say tobacco or alcohol. To me, it looks like gaming. This looks like gaming to me. This looks, on a state-by-state basis, the way that casinos and card rooms are regulated, as the ultimate B2C kind of experience, and then all the B2B stuff behind it looks the way it looks. But that's what I think this ends up looking like from the adult use side.
And what about just keeping a bifurcated market? It just doesn't seem to make sense to me. In fact, in Washington, it's regulated by one governing body, the Washington Alcohol Control Board. I think I've heard anecdotally that Colorado is looking to do something similar. I don't think it would make sense for a state to pass recreational and then medical. How long do you think it will be before we have a combined market, forgetting federal legalization just within each state?
Well, just keep in mind, though, when you talk about Washington collapsing their medical program, that's not a real medical program, the way that we in the U.S. look at medicine.
Or just how it's regulated, just the regulatory.
But it wasn't even being regulated as such, right? It was just being called that, but if we look at the way that we go get our prescription drugs, there was nothing even close to what that looked like going on in a state that has a medical program, whether it's here in California or Washington. I think that the medicinal efficacy of this plant is more than proven, and I am a huge proponent of and believer in. That notwithstanding, as a business guy, call it whatever you want to call it. It's adult use. That's what we're doing in all these states. You want to go do medical for the sake of pharmaceutical medicine the way we look at it in the U.S. You talk about, you want to go make investments, go buy GW or you guys already all own it. Great. Go buy it. Those guys. You'll go to Walgreens. You'll get a prescription from your doctor. Right now, the big turning point is a doctor has to be able to prescribe it. Right. So you have to talk about rescheduling. Those things have to happen on that level. But once that happens, I'm sure all the big pharma players will be in. They'll control that part of it. But I don't think you can compare Colorado, Washington, California, our medical programs. Now, again, not saying that is not being used as medicine by the people accessing it, but I'm saying that the way in which it's created and being deployed does not look anything the way that we look at medicine here in the U.S.
I'll jump in on that just for 1 second. Right now in Washington State, so there has been this sort of merging. It's really hard to buy CBD or CBD strains, CBD extracts. It's a challenge. There's not as much of a recreational market for those particular products, which is causing harm to medical patients. Ultimately, I think we end up with 3 markets, and that's how we think about it. I think we end up in 3 markets around the world, where there's a a clinical pharmaceutical product or line of products that's available around the world, typically with insurance company coverage, and we're going to see those. We're going to see that emerge over the next 2 to 3 years. I think you're going to see a wellness market that is much more similar in form factor to the current medical markets available in the 24 medical states, and then you'll see a recreational market that will emerge, and you'll see different states adopt different regulations across that entire spectrum. But I think there's going to be a spectrum, and many places, many countries will have regulations around all three. And our perception, our belief is that regardless of which segment you're looking at, people deserve to have access to clean, professional products that are safe and clearly labeled and clear of mold, mildew, fungus, pesticides, heavy metals, and other contaminants. And they have a right to access that in a legal framework.
Yeah, I very much support Brendan's comments. One thing I would add is, to the idea that the different states will have a different blend of, how they lay out their recreational market or how they lay out their medical market. I think what's going on is, right, it's fairly simple. We have each state is signing on, and each state gets past what it can get past, right? And over time, through federal normalization, these different states will slowly converge and things will normalize. And it's not that every state will be the same per se, but the states will converge over time to a more accepted, global set of rules, so to speak. And that's kind of my take on things.
Okay, great. Well, how about we open up the floor for some questions?
I got one question. I'm just curious, and maybe this is a dumb question, but how do you define end of prohibition? Is that global elimination of all laws making it illegal to smoke and distribute and commercialize cannabis?
Oh gosh. So I think there's different phases across the different markets, right? So in the U.S., it would mean that any doctor can prescribe a product based on cannabis, using cannabis compounds and extracts. I think that it allows, in the U.S., we'd conduct a lot more research. So currently, one of our portfolio companies is involved in 7 true clinical trials around the world. Each one of these trials is $10 to $100 million, and they're all being funded by governments or nonprofits or universities. But we'll start to see that research in the U.S. and it's current regulations are detrimental to companies in this industry based in the U.S. because all of that IP is being developed outside the U.S. In terms of recreational, I think you'll see a legitimate, transparent recreational market that allows equality in terms of taxation and equal access in terms of banking, and that implies a lack of reliance upon cash. I'd probably start there, and some sort of removal of oversight by the federal government and allowance for this experiment in democracy to take place on a state-by-state basis.
I should probably just be, as a compromise, we probably have to throw in a federal tax on top of that. Alcohol is a federal tax, tobacco does, gasoline does, marijuana will probably also have a federal tax. And once that federal law allows states to determine their own policies, then you'll see the straggling states, Mississippi, Oklahoma, those kinds of states, they will legalize after federal law changes. And if you were to ask me, when will this federal law change? My initial prognosis was that if everything goes well on the state level, we could actually change federal law in the 2019-2020 Congress. So that means everything has to go well, which means we have to win a whole bunch of initiatives on November 8th, and we're not funded to do that yet. And then we also have to pass bills in state legislatures in the next couple of years, et cetera, and then we could reach that. So my initial prognosis was 2019 or 20, and then the compromise, the backup, 2021, because that would be the second term of a Trump, no, sorry. A Clinton administration, probably. So that's sort of, if you're thinking about long-term planning, 2021 might be the sweet spot for federal law change.
Yes.
Yeah, just curious, to the same gentleman, what are the practicalities of a company or an entity or a person in California complying with a proposal of the passage of the law, and then the feds coming in? What are the real possibilities of what the feds could do to that?
Are you asking about what the feds do currently?
Federal law. If they carry it, if the DEA came into the total extreme of what they can do, are people going to go to jail?
I'm not following. Are you saying under current law?
For the current federal law, someone in compliance with a state law, what could the feds do to it?
So, well, I mean, if you're asking about what can the feds do currently, and they want to not pay attention to the call memo that the Justice Department issued in 2013, then you're looking at the federal death penalty, theoretically.
Don't ask Rob crazy, extreme questions like this.
There are federal mandatory minimums. There's 5 years mandatory minimum for growing 100 plants or 100 seedlings, 10-year mandatory minimum for growing 1,000 plants or 1,000 seedlings, and if you're involved with 60,000 plants or 60,000 seedlings over the course of your entire life, then President Clinton signed that crime bill into law in September of 1994, which is the death penalty. So these federal penalties are in fact severe.
I'd say. Intellectual honesty.
The call memo does provide, I think, true meaningful protection while the current Justice Department is in place. But as you all know, there will be a new Justice Department in town in Washington, D.C. In January. And so then there could be, I assume there might be some kind of new memo, but it won't come out in January. So yeah, there's a high risk, which is obviously why there's such an opportunity with investment. The higher the risk, the more the opportunity. And I will say that those who are on the investment side are obviously under much, much less risk than those who are the operators. Again, that's why there's potentially more money on the operator side, because there's a greater risk there.
So before we close out, I have one clarifying question, because being out with our company out into the market and the landscape, plus being on the board of the bank, what I thought I heard you say is now is a good time, because in a relatively short window, you're going to have what we would call mainstream investors, institutional investors, begin jumping into this industry.
Now's a good time for what?
For family offices and so forth to get in before the flood of cash as it gets closer and closer.
I can't even take credit for what I'm about to say, but I'm going to make Chris Gannon really happy. There's an informational arbitrage. Look at that. He coined that. But I mean, you got two things going on. One is, for those people that have been in the industry that understand what's going on, there's an informational arbitrage to be taken advantage of because institutional investors aren't there yet. But on the short fuse on that, institutional investors will be there, and once they're there and they're paying more of a premium to roll up, at higher valuations, and they've got war chests way larger than most family offices have access to. I think that the opportunity for the family offices to actually go grab real meaningful chunks of this space go away. And for me, based on the knowledge I have with the relationships I have with the guys that run funds, also with my understanding of the political landscape, I would say by the end of the year it's done, especially with the victories that we expect Rob and his team will help the industry have in November. So I'd say it's this year. I say by the end of the year, it doesn't look like this anymore, and you're not having a meeting like this with people that want to go put dollars to work that have this kind of direct access.
One last question.
Back to Ms. Kaminsky. So now that we're not going to be growers of more than 100 plants in this room and we're investors, how far does that law spread out? What if we facilitate the growth of multiple plants? Like we lease our building to a builder. Would those severe potential federal crime laws apply?
Who wants to answer that question?
No, I think he was asking him.
He's asking Rob.
Yeah, he's asking Rob, not me.
Be careful. So I guess I'm doing here what I apparently did in
The investment question.
to not along with news. So if you're involved in any way with the cultivation of marijuana and distribution, if you're not personally touching into the conspiracy, which then also has federal regulatory minimums. So I will say that the federal U.S. code, I mean, is really, really strict. Another answer to his question. These laws have, and the reason that the federal prisons are bulging with drug offenders as opposed to, violent thugs is because of those mandatory minimums that took place that were enacted in 1986. So, there's so many cases that have gone through the federal courts of folks who've been involved with cultivation and sale and distribution of marijuana that if you want to get a deeper level of understanding of the odds game of you getting tagged for this, there's a lot of case law that can provide insights as to what degree of involvement can cause you to run into some legal jeopardy.
As the guy probably most involved with growing enough plants to get the death penalty, I just, one, defer some of these questions to the lawyers. Two, it's really not about the black and white nature of federal law on the books and what the extreme of that would be, because between federal law and you operating a state-compliant business, it's not just the Cole memo, it's all the activities that have taken since then. It's the Department of Treasury memo, it's the Cole memo, it's the fact that Congress has to go ahead and approve a budget, it's the fact that the budget doesn't allow the DEA to go investigate and prosecute people that are compliant with state law, it's the fact that there's now case law in that regard supporting that. So, I mean, if you want to ask crazy, hypothetical, extreme questions of, what happens if all of that went away, then I can get very practical with you and say, for all that to go away, it's not me that they're going to give the death penalty to. It's the guys in Vegas that sold their casinos to get into the marijuana business. It's Harry Reid's kid who's in the marijuana business. It's this, it's the fact is the captains of the world, the captains of industry have gotten into this space and they're more exposed than you are because they have way bigger bets than you do. And believe me, those guys, as you know, control politics probably as much or more than you do as well. So, there's a practical answer. There's a common sense using, some real solid legal backing answer. And then you ask Rob, and the answer for Rob is until the federal laws are changed, it doesn't matter. And that's why we should give them money to just go change the federal laws. But in the interim, we're going to go take advantage of the fact that there is a window.
So, ladies and gentlemen, let's give Asher, Matt, Adam, and Berlin a big round of
Thank you.
Remember, you have an opportunity
Thank
to
you.
talk
You're
to them
actually
during
very
the break and during the cocktail hour. For those in the back, we have...
I was going to come up and tell you my name and everything I did, but now that Rob Campia told me I'm facing the federal death penalty for this, I'm going to change this a little bit. I'm in the bicycle business. No. My name is Christian Haggeseth, and I'm the founder and chairman of Inspiro. We're a global cannabis company. I started in Colorado, where I'm the chairman of Green Man Cannabis. I've had the good fortune of having great success in the marijuana business. I got into it 7 years ago, and over the past 7 years, I've had the good fortune to see Colorado in the medical marijuana field. I saw it go recreational, was there for day one. I've won 6 Cannabis Cups, which is the highest award for product excellence in the industry. And growing a great product is only one of many pillars it takes to succeed here. So I don't hang my hat on that. I'm really proud of what we do, but that's not the end. We've got interests in Israel. I work in Massachusetts, soon Maryland, and possibly Hawaii on another partnership. So I'm very diverse in the marijuana space. I wrote a book called Big Weed, which was published last year by Macmillan. I actually got paid to write a book, which was a lot of fun. And it's about the marijuana industry. The first 5 years, the business of marijuana, what the trials and tribulations were. And I'll be signing that book in about an hour and giving away copies if anyone's interested in it. So, but all of that said, I'm here to talk to you what I think is the most exciting project in marijuana today. I've been an entrepreneur all my life. And with 7 years in the industry, every day I sat there and looked at not what our potential was, but or is at that time, but where is the industry headed? And I look at this from an investor's point of view, and I say, where's the smart money going to go? Because it's really hard to make money in the picks and shovels business of marijuana right now. You want to see where the money's getting generated, the billions of dollars? It's selling marijuana. And right now it's a commodity. And we as an industry need to sell more marijuana and move away from the commodity. And what we're working on here is the Colorado Cannabis Ranch is what we call the world's first weedery. It's like a brewery or a winery, but for legal marijuana. It's been talked about a lot. After I wrote the book, a lot of media has picked this up. And we believe the reason media has picked it up is because the concept is, it resonates with people. People hear about it and they say, that makes sense, I would like to go. Again, I've been at this for a long time. I don't come at this from day one. I've been a marijuana entrepreneur. I've had a lot of success in the industry, won a lot of awards. High Times Magazine called me an industry trailblazer last year, and now we're out to build what I really believe is going to be a project that further defines marijuana into the future. Has anyone here ever been to a winery or a brewery? Probably, of course. Well, we're hoping that weederys become as popular. Particularly here in California, you either go up to Northern or Southern California, there's great opportunities to go from one winery to the next. And although we're developing the world's first weedery in Denver, I hope this is a trend that will continue. Because manufacturers in the marijuana space, just like alcohol, have a lot to gain by first producing on a large scale at a good price. We grow in the indoor warehouse market too, and I could not agree more with these guys. If you can short the indoor marijuana warehouse market, do it. It is a money-losing proposition. Guys that own giant warehouses are about to go broke. Those things are about to become financially obsolete. The reason I say it with such certainty is I do it every day. It costs $850 for me to grow 1 pound of marijuana indoors. I can grow that same pound of marijuana in a greenhouse for $350. So in theory, the guy growing at $350 can sell at retail and make money for less than the other guy can produce for. So when, and it's happening, when capitalism comes to rest its head on marijuana, we're going to see a lot of price pressure. And there is no way you're going to grow in a warehouse and keep up. So if you don't see the history, the future of marijuana in greenhouses and outdoors, you're really missing a big part of this landscape. So we're looking ahead at the opportunity to build the Colorado Cannabis Ranch. And the ranch is, it's a culmination, it's a manifestation of what I think it takes to succeed in this industry. And the first is, it's a better business model, all right? Follow me with numbers real quick here, I'm gonna try not to go too fast. To build a warehouse in Denver today costs about $70 a foot. To outfit that to grow marijuana costs anywhere from $125 to $200 a foot, depending on what you want to put into it. To build a greenhouse that's ready to grow marijuana, $75 a foot. So you're either going to spend between $200 and $250 to build a facility, or you're going to build a greenhouse for $75 a foot. It's much cheaper to build, and it's cheaper to operate. So the better business model in the weedery first is, we're going to be building big greenhouses to grow product at a better price. And we're talking about some of the best weed in the world. I've won 6 cannabis cups. We know what we're doing. But we're going to grow great product at a better price, and that's the better business model. Secondly, it's about engaging consumers. All right, marijuana, if you want to sell marijuana as a commodity, go ahead. I don't want any part of that business. I want as much of a commodity of marijuana as Howard Schultz wants commodity from the coffee bean. All right, we're going to start with the raw material of cannabis, and then it's our job as those in the industry to create products that consumers want to buy. All right, and if you're selling a commodity, you're missing what consumers want. I paid $5.50 for my Venti Americano at the Anaheim Hilton the other day. $5.50 for about 25 cents worth of coffee beans, hot water, and a cup. Right? Marijuana has to do that same thing. If anyone's sitting here fretting about the commoditization of marijuana, you're missing the fact that this is a consumer product. Our job as entrepreneurs, as capitalists, is to create better products that are of higher value that people want to buy. And so this destination is to show off, is to not only to a better business model to invite them in, but bring people into what we're doing. Show them how marijuana is grown. I've given hundreds of tours, literally, of our grow facilities, and almost every time, it's the first time somebody's seen a marijuana plant actually growing. Every time. Most people don't know we don't grow marijuana from seeds. We grow from mother plants. And then what the cycle is. How long do you flower for? When do you harvest? How do you dry? How do you trim, package, cure, process, extract, infuse? There's a lot of curiosity for people out there about this right now. And so we're going to build a big greenhouse. We're going to invite people to come in and take a tour. That tour is going to begin and end, as all tours should, in a gift shop, because we want you to buy our swag. We want to brand this experience for people. So when they're coming there, you're not just having an experience with marijuana, you're having an experience with our brand of marijuana. So it's better business model, making it a premier destination for the industry thought leadership and tourism. Canna tourism is a big deal in Colorado these days. And what all of that builds to, though, is brand affinity. We want people to first recognize our brand of marijuana above all others, and eventually have affinity for our brand. Because, again, I firmly believe that marijuana, either medical or recreational, is a consumer product. And with that, we need brand affinity to be successful. So the components of the ranch, again, that we're going to do to get people excited about what we're doing is we're going to build a great place that has we're going to offer cultivation tours, an on-site dispensary so you can buy what you see there, a restaurant and rooftop bar. It has nothing to do with marijuana. There's no infused products. But when people are there, we want them to stop, have a burger and a beer, sit with a friend, marvel at the place you're at. It's the only weedery in the world when it gets built. And that we want people to sit there and have an experience again with our brand. Eating the burger and the beer is not about the weed, it's about having an experience with our brand. And finally, a live music amphitheater. Marijuana and music go together like peanut butter and chocolate, which is better than peanut butter and jelly, which is a natural to put these two together. But what the amphitheater really does is it brings in, it's an 8,000 person amphitheater, about 50 shows a year. So we'll have about 400,000 people a year coming through this facility and having additional impressions of our brand. So if you've heard me say brand about 18 times in this, that's because creating brand recognition is a critical part of this. Because if you want to grow a lot of great product at the best possible price, you have to be able to sell it at the best possible price. So the main features of this development are really about getting people engaged with what we're doing. The ranch is located 2 miles from Denver International Airport, which we spent about 1.5 years looking for this site. We're really excited about it. 71 million people a year begin and end a trip at DIA. We think we can capture a significant portion of those people to stop by before or after they get to the airport. And I actually think that if we're successful at doing this, that the most often searched term on Travelocity next year might be, how do I get a longer layover in Denver? So I know you can get me to my plane in 40 minutes, but can I lay over for like 6 hours? I need that edible to wear off before I get back on. So the team, listen, we got a great idea. I've been doing this for a long time. We got a stellar management team. Because if anybody here has ever invested money, you got to like the idea and love your managers. I'm really proud of the team we have. Jeremy Sova, one of my guys, is here right now today. Jeremy. And finally, the numbers on this are fantastic. We're looking at about a 66% IRR, 8 times return on capital. We're looking for capital partners to help us on this one. And on, we'd like to build several of these around the United States. We've already raised about $2.5 million out of the $20 million. We started raising on January 25th. And we're looking for more of that. And again, like I said, I'm going to be signing my book out here a little bit later. Those are free to y'all. Please come and take one. I'd be happy to sign it and talk to you about it. And Jeremy Sova is with me as well if we need any more information. And other than that, thanks for having us.
And I have no doubt it will be on the Travelocity. So you can hang out later at the cocktail party. And if you get a chance, tell Noah, great job. Now,
Are we on now?
There we go.
Good enough. Well, it's great to be in front of all of you today, and we do appreciate having Noah have us on the panel this morning to talk a little bit about technology. My name's Jim Gingery, and I'm the Chief Operating Officer of Cannatrek Technology and the Kahner Card. And essentially what we do is we provide some transparency to the cannabis industry regarding banking. We've heard a lot about that today in terms of the issues with bank accounts and such, so essentially that's what we do, is help solve that problem significantly.
So my name is Evan Enneman. I'm one of the founding partners of Casa Verde Capital. We are an early stage venture capital firm based here in Los Angeles, primarily focusing on the picks and shovels of the industries, the infrastructure, building out the industry right now. And you know, we can talk about technology. We cover a lot of different sectors, and technology is one of them. We've done a lot of work in early venture in traditional technology, consumer technology, prior to the formulation of the cannabis firm. And so we can talk about that as part of this discussion, and happy to do so, and talk about the ecosystem that we have that supports that as well.
We started without you, is that all right?
No, go right ahead. Good to see you.
So let's give one more big round of applause for our presenters. And let's jump in and see how we can make a difference.
We gave our introductions.
Introductions?
We did.
Good. All right. Sorry I'm late. Getting a cup of tea. So you guys have already done intros.
Yes.
Great. And I'm Micah, one of the managing partners at Canopy Boulder. Canopy's made 29 investments to date in the legal cannabis industry. I think that actually makes us one of the most, if not the most, prolific investors in the industry so far. And our play is ancillary products and services. So we don't touch the plant, we don't do cultivation, we don't do extraction, and we don't do retail, either medical or adult use. My background comes out of cybersecurity, and both Fortune 500 world, and then doing a bunch of startups before going on a bicycle ride and talking with a buddy about cannabis, and suddenly going, cybersecurity is pretty damn boring. Let me see about this cannabis thing. And that's how we got involved there. This is a panel discussion, and we're talking about technology in cannabis and where that sort of plays. But given actually sort of the tone, and we've been sitting through some panels and some discussions with Q&A at the end, I wanted to invert that and actually get a couple of questions from the audience to guide our discussion here, because we've got two folks up here who know a lot about the industry, about technology, and about looking at investments, which I think is what most people really are focused on here. So, questions from the audience. What are some things that you're curious about technology in the cannabis sector? Yes, sir.
So I'm curious, technology is appealing in one way because it's so scalable.
Yep.
I'm familiar with a couple of applications in the cannabis space, though, that because of the regulation, that the technology isn't scaling because the regulatory environments are all different.
Absolutely. Yep.
Do you consider that a threat or an opportunity to the startup tech companies looking at this space?
Well, to answer that in one direction, I think is it's important that any company not only look at today, but look at tomorrow. With all of the states that have different rules and regulations, different requirements, different limitations on purchase requirements, you really have to make sure when the company is built in the first place that you're not only looking at today, but tomorrow as well. I think you just have to. So I look at it as an opportunity if the company is built properly.
Yeah, I mean, I'll definitely second that. So I come out of also a consulting and audit background, working with Fortune 50s and venture-backed companies and across industry sectors. And most recently in cybersecurity and privacy, and when you look at different laws in those two areas, and even in healthcare, you find the regulatory framework is different state by state, and it's different country to country. So what enables those industries to really grow and flourish is technology. So it is the opportunity to sort of normalize what the regulatory environment is and actually act upon that in a way that is scalable. Operating in multiple states as an operator is much more difficult and more difficult to scale, but technology can. And so that way it is an enabler to many business sectors within the cannabis space.
Yeah, and let me expand on that a little bit, talking about the cybersecurity and the privacy issues. So there are 50 different privacy requirements within the U.S., because every state has its own privacy requirement. Most of you have probably shopped at Target. And a couple years ago, Target got hacked, and their credit card system got broken into, actually through an HVAC system, which was HVAC contractor, which was the way that actually came about. So we're going to see, as a result of that and a lot of other issues, a continuing focus on privacy and cybersecurity. Now, what the hell does that actually mean, and how does that apply to, business? Right? Well, there are vendors out there who specialize now in managing the reaction, the crisis management to a breach, specifically because Target is not going to be able to handle 50 different state legal structures for reporting on a privacy violation. You have to turn to a third party. And so they turn to that third party to actually handle the response to the breach of Target. And so there's this great opportunity for anybody who wants to manage privacy regulatory stuff to go out to the Fortune 500 companies and say, hey, we can mitigate some of your risk here. Same thing can happen around dispensaries. There are 536 dispensaries, I believe it is now, in Colorado, which is where I live. And each one of those dispensaries has a regulatory burden placed upon it. So that software can be installed to help manage the regulatory burden. Now, how many folks out there are investors? A lot of investors, family offices, et cetera, right? So when you're evaluating deal flow and you're looking at this, looking at a software solution, the question I would actually ask is, are they set up to handle multiple regulatory structures? So as a business, you cannot create Google and just deploy it to the 50 states. You need an organizational structure in that investment that is going to allow them to have a different solution for New York than for Florida, than for California. And that is a fundamental structural issue with any investment that you may want to make. And so you need to look at the management team and say, how are you going to implement a regulatory change when it comes about in New York? And is that going to affect anybody in California? Because that's not a good thing if it does happen. And oh, by the way, talk about arbitrage, taking advantage. Why wouldn't IBM do this? Because IBM doesn't want to manage 50 different variants on a solution. They want to build one and deploy it to 6 billion people around the planet. They don't want to focus on Nevada being different than California.
One other point to that in what technology is able to do, and you think about a regulatory environment, and we see this today in very scalable businesses, not in the cannabis space, because it disrupts the current regulatory framework, it actually forces change through litigation. Uber is probably the best known one to do that and the most scalable and scalable globally. They've had a lot of roadblocks along the way, but that's a technology company. And they've taken a patchwork regulatory framework where they were operating illegally in some jurisdictions and not in others, and they've created that change for that business. So that's when you look and say, what is the strategy that we're looking for, and how do we disrupt the current landscape to create opportunity for ourselves? So that's what technology is able to do.
And another aspect of technology for this industry is biotech, and this creation of new formulations, of new products, new derivatives of the plant. So that's another aspect of technology that we look at as investors, and we're evaluating putting in money into those sectors. So you have different ways of consuming cannabis now with different technical implications from that. Yes, sir.
In a scenario that you're talking about, like say cannabis or infused edibles, even when you get to the point of being able to perfectly measure them and whatnot, the big problem really is you go and buy production equipment and then try and place that in somewhere like Colorado, get 2 million people, forget about it. Because we can cover the whole state in one afternoon.
Yeah, so the question is really about, as we get into building more custom solutions, sort of the cannaceuticals, if you will, is it going to work to deploy to a smaller state like a Colorado or a Utah where the population is not necessarily great enough to demand the whole market size? Anybody want to, Evan, you want to tackle that? Or?
I mean, the way I understood the question is how does that impact when you can't actually transfer products across state lines? Because you can set up production facilities in one state and not transport. And I think you're going to have some larger biotech and nutraceutical companies focusing on that. And they will have to deploy in multiple markets, and they're going to look strategically to the biggest markets first. California is the obvious one. That's why you have a lot of biotech out here already. Same thing in the Northeast corridor. So, I think that's just going to play out over time as we see regulations change. But, technology will be an enabler to that as well. And once you can actually go through and perform the R&D that we're seeing in other countries such as Israel, applying very structured and regimented routines, then I think the dosaging and the understanding of bioavailability of these products is going to change over time, and you'll be able to create repeatable products.
Yeah, and I would definitely second that. And just talking a little bit about it, again, coming back to being agile, right? So the big pharmaceutical companies right now, or the big manufacturers, are looking to distribute to 330 million people across the country in one fell swoop. Right? Can we manufacture something and then send it across the country? And that's the way, for example, natural products works, the whole food system and all of that. This is going to be a little bit different. You're going to need a manufacturing facility in all these different states. And that probably won't change for quite some time. What that does is it allows an opportunity for a smaller operator who's more agile and can set up manufacturing and production at a lower cost to deploy into a state like Colorado. And also, you start looking at demographics, you start understanding more about the movement of people. Colorado, everybody wants to say, hey, it's only 5 million people in Colorado. 40 million visitors, right? So that's a 45 million person addressable market because of the huge tourism thing, right? Nevada is another one, tiny market, except they get 40 million people visiting Nevada as well. And so there are these market opportunities to come in right now and make these investments into these companies that are doing state-by-state distribution, state-by-state manufacturing, et cetera. Other questions? What else do we have? Yes, ma'am. The electric company cashes checks or takes cash from cultivators every single day, right? Nobody seems to care that, the electric utility, which is a multi-million, multi-billion-dollar company, is banking a lot of cannabis money. And their arguments that it may actually be the majority of their growth as an industry is coming out of cannabis, certainly in Colorado. And that ties back into HIPAA, because a lot of the HIPAA providers, or HIPAA compliance providers, are large companies. Well, they're scared to get involved, right? So if you're looking around at the big HIPAA compliance companies, right, the IBMs, the Booz Allen Hamiltons, et cetera, and you tried to get them to come in and, like Native Roots in Colorado has, I think, 12 dispensaries. Maybe Native Roots wants Booz Allen Hamilton to come in and do HIPAA compliance for them. They're not going to get that contract. Booz Allen won't even go near it. So there's an opportunity there for a HIPAA provider to walk in, basically do exactly what Booz Allen would do, build a huge base of customers and provide that valuable service, right? We're seeing it here. We have attorneys, like Michael spoke earlier from Dorsey. I was with Michael in the reception area. Somebody goes, oh, Dorsey's working with cannabis clients right now? Why did they ask that question? Because the top law firms don't normally work with cannabis clients. So Dorsey, being a large firm, it was sort of surprising that they're actually handling cannabis clients. And the same thing applies back to HIPAA.
Yeah, there's a misconception that large companies are not touching the space. I would say 95% of large companies, including professional service providers, banks, they're all touching the space. They're all just not being very much vocal about it. So you do have large consultancies that are already operating in the space and law firms that are already touching the space. They're all service providers. So everyone's sort of doing things behind the curtains a little bit, and they're using partnerships and JVs and technology to enable themselves to do that as well.
I think you find too with, I think the most recent number is that the number of banks that are actually banking cannabis businesses is up about 600%. And if you look at the number of correspondent banks that those banks relate to before it ever gets to the Fed, could be 3 or 4 times that many that are actually touching the dollars within the banks. But the banks don't want to deal with it openly because of the cost of compliance. It's incredibly expensive unless there's a good financial system in place, management system in place for them that reduces that burden. And the other reason is it's mostly cash, and that's a big problem. $20 billion in cash by 2020 is a lot of cash transactions, and we know that that's not going to be long term.
No, I just wanted to touch upon something, and we can go back to some questions that This is a very large ecosystem. We can talk about the next 3 to 5 years when institutional capital is able to join, and the Fortune 1000 can join, and I think that's all good and well. I don't think it changes the landscape for what we're seeing from a technology standpoint right now, and I think that's just the reality of, from our standpoint, early stage venture, we can say, well, every business is already in existence, so why do we have a startup environment, and why do we have innovation? And I think entrepreneurship is meant to do that. You can create new enterprises that disrupt the current framework of what's happening. And we're seeing that in the cannabis space, the same way we see it in media and digital media, the same way we see it in traditional technology and fintech and ag tech. So the landscape is fairly broad, and I think it's very attractive. If you look back to Prohibition, those companies who fared the best were picks and shovels. It were the Levi Strausses of the world. I think Adam's point of view is spot on. There are different risk profiles for different investors. And so you just have to look at the landscape and say, what is your risk appetite? What makes the most sense for you? How close do you want to be to this? I think the comment earlier of, well, pretty much anyone that's in the industry is facilitating and ultimately exposed to federal sentencing. But you sort of have to look at that for yourself, and what's the appetite for your family office, for your investors, or for yourself. But the ecosystem is tremendous, and what's really nice about the cannabis space is you can take really robust technology providers and accelerate them in an industry sector that other people don't have access to. And what's attractive about them is that then becomes scalable in and of itself, because they built this technology on the backs of an industry that's growing exponentially, and you can scale that and transfer it out. And that's a lot of what we do is we look for companies that are both outside that can place practical application of their technology in the cannabis space, or vice versa, that can scale their businesses within this industry and then deploy it outside. And so that's why the technology sector right now is really attractive in the cannabis space, from my perspective.
I concur completely. I think that if you're looking to invest in the sector, right, we have a diversified portfolio. We are pretty diligent about trying to manage that diversification because what is the future going to look like? Nobody knows. If you want to try to learn more about how to predict the future, I don't know, go to a seance or something like that, not to an investor forum. But what you can do is you can diversify your risk by diversifying your portfolio and investing into different verticals. So grow tech. Grow tech is a huge, huge opportunity in this industry. Why? Because it's the most valuable plant on the planet, basically. It's like cannabis and truffles as the two, high-value plants that you're going to grow. I guess one's a fungus, but so grow tech. Can you create a better irrigation system? That tomato producer, he doesn't have any money to put into R&D, but the cannabis producer has money to put into R&D for a better irrigation system. You give a 5% improvement in water efficiency through irrigation with cannabis, and you transfer it back over to tomatoes and other cultivation, orchids, all of these different things. That's a huge market expansion opportunity. Technology, RFID. We've been talking about RFID for years. The only time any of us use it really is probably going through a toll road. That's your RFID. Well, cannabis is actually pioneering RFID technologies. It might actually make it to the damn grocery store finally, so you can just wheel your shopping cart through the outdoor and it'll auto scan all of your groceries, which would be really nice for me. Tremendous amount of transfer and seeing. Another investment tip, if you want to take one and run with it, real estate, go shop and go find all of the street corners in all of the cities that will legalize in the next 10 years and buy up real estate holdings that are not within 1,000 feet of a school or a daycare. Why? Because almost every single jurisdiction will prohibit the close proximity there. All right, we need to wrap up. So closing statements, Evan?
Yeah, no real closing statements other than that this is a fairly broad landscape, and I think to educate yourselves and talk to enough people in the industry, there are some exceptional operators and some exceptionally shady operators. So be careful, do your diligence, and talk to as many people as you can before you actually jump in.
Yeah, Evan with Casa Verde, so please make sure to come up and say hello to him later on during the day and get more insight from him. Jim, closing statements?
Just real quick, from a technological standpoint actually solves a problem. Smoke and mirrors. I think it was the Red Wagon versus, I forget what the earlier one was, but we used steak and sizzle back a few years ago. So make sure that there's some steak behind the sizzle.
So ladies and gentlemen, please give a big round of applause for Jim, Michael, and Evan. At SC Labs. So, if you can give them a big round of applause, I'm turning it over to you, Kevin.
Thank you, JJ. Thank you very much, folks. This is a very, very exciting group of people, and what we want to do is a lot of things in cannabis have already been covered today a little bit, so we're going to really try and zone in on one of those markets that we talked about. We talked about 3 different markets, but the medical market really overflows into 2 of them, wellness and pharmaceutical. So we're going to try and see if we can really delve in with 2 really good experts, and I had the opportunity of spending some time, so I'm very impressed. Let me introduce myself. I'm sort of a serial entrepreneur, been involved in a lot of industries. Sobe is the one I'm probably known for as having founded, but my biggest business was in skincare, and we accumulated over 120 patents in skincare and literally owned the industry. We're in 40% of all skincare products in the world. So when I talk about cannabis, I see the opportunity to build parallels between this industry and what we did in skincare in terms of building real IP. And that's what my particular company, Kahner Enterprises, is doing, is building mainstream medical-related cannabis products, whether they be delivery systems, whether they be skincare products. And we're involved now in a number of clinical situations because we really believe that the future is going to be the big boys coming in and looking for intangible assets and IP. And that's what we're developing in the form of our companies. In addition, and lastly, I just bought a company in Israel with a few other people, which is in the agricultural side, the quality control of agriculture and cannabis and other agricultural products, Israeli Plant Sciences. And some of you here have been talking to us about possibly working together there. We're already working with some oil-rich countries to help them develop their agricultural businesses. So without further ado, being the moderator, I want to really shine a light on my 2 wonderfully qualified colleagues here. So Rob, why don't you just tell us a little bit about what you're up to and your background, please.
Sure. My name is Robert Hunt, and I'm with Tuatara Capital. For those of you that know Tuatara, we are the single largest private equity fund in the cannabis space. Again, I believe there might be a couple groups that may have more AUM, but as far as the traditional fund structure as a 3C1 private equity, we're the largest. I got into the cannabis industry more than 20 years ago. Before there was a true cannabis industry, I've watched it evolve since then. I've operated as a consultant, an attorney, an operator. I've been an executive of a cannabis publicly traded company, and now I'm a general partner at Tuatara as a lead industry executive with the fund, as well as being a GP over there. We typically write checks between $4 and $7 million, equity checks, and we are looking to build out a portfolio of 12 to 15 platform companies that are laser focused on specific subsectors within the cannabis field.
Josh?
Yeah, and my name is Josh Roser. I'm with SC Labs. We founded SC Labs about 5.5 years ago now. Before that, I worked for Steep Hill Labs, which was the first lab that did cannabis testing for the general cannabis industry. Before that, I was a research and development chemist for a small pharmaceutical company, and then later for Samsung doing electronic materials. Took the job interview just to kind of see what it was all about with Steep Hill. Saw a job posting for someone looking for an analytical laboratory director, and said at the bottom, normal lab posting, said at the bottom, must be comfortable working with cannabis. There was nothing like that at the time, so I went to the interview just to see what was going on because it looked interesting, and they offered me the job right there, and before I thought about it too much, I accepted the job and thought I'd go slumming for a year and then get a real job again, and been doing that ever since. So.
You think you have a real job now, Josh?
I think so. And actually, I tell people now, I think it's a great career move. The cannabis industry is a real dearth of technically skilled people.
How many people are working at SC Labs?
Right around 50 now.
Great. So look, Josh, let me start with you. Rob has such a broad knowledge. I want to start with the lab side because we want to start with quality. We all know that the cannabis industry is somewhat fragmented, scattered, what have you. Let's talk about the quality control issues that you're confronting being a laboratory and what you're seeing out there in terms of trends, et cetera. Please speak to that subject.
Okay, well, so when we first started doing the testing, way back when, all we really did was quantify cannabinoids, and we did some microbiological testing. Since then, we've added a lot of assays, and kind of the idea of quality control for cannabis has really expanded. I think for most of your cannabis products, the cannabinoids, the terpenes are kind of your quality indicators, but the safety concerns lie in microbiological contamination, residual solvents for extracts, and pesticides is the big thing right now. We do pesticide testing in California. It's not required there. We have basically self-selected clients that bring their samples in preparation for 2018 when there will be pesticide regulation in California. And right now our test is a basic screen. We look for 12 analytes to keep it economically feasible for our clients who aren't required to do testing. Our sensitivity is actually much higher. Our detection levels are much higher than they will be under regulation. We still fail 40 to 50% of the tests that come through for pesticides. So it's going to be a huge issue going forward as states like Colorado, Washington, Oregon, California start to actually put some real teeth to their pesticide regulations. Most of the cannabis right now is grown with some sort of pesticide. And so that's going to be a huge issue is a lot of these producers are going to have to learn how to produce their products differently.
So that's sort of a micro look. Let's go macro, Rob, and let's talk about the issues that you're confronting as an investor in the industry and what you see as the trends in medical cannabis that we should be looking at as macro trends in the industry right now.
Sure. So in some of the earlier panels, people alluded to it already, that there's really a bifurcation of the industry. And it's not just on the standpoint of what we're seeing today that's medical cannabis that most people in the industry believe will tomorrow be adult use recreational cannabis. But then there's also the wellness or therapeutic side of it, and then there's the traditional true medicinal side, which I would argue isn't even technically the cannabis industry, but more the cannabinoid industry. And so what we look for when we're thinking about an investment into the medicinal side is where does the company fall within that realm? And the companies we're looking for are people that actually really are going after the true biotech or pharma side of the industry that have defensible IP, that are filing and receiving patents, that are trying to find ways to either work for specific attributes that are directed towards a specific ailment, or working with biocatalysis or biosynthetics or synthetic biology that's geared specifically to developing pharmaceutically pure cannabinoids that will meet with the DEA or with the FDA standards and be able to get licensed through the alphabet agencies within the federal government to get to market on the pharma side. So when you think about the traditional API market that exists in pharma today, for any other drug development, it follows a very specific path. And that path, there's been a lot of discussion today around the descheduling of cannabis away from Schedule 1. Once you deschedule away from Schedule 1 to Schedule 2 or lower, then you're following the same traditional pathway that already exists with the FDA, and you're going through clinical trials and double-blind studies. The companies that we're looking for are the companies that have the ability to work within that pathway to develop something on the medicinal side that is truly what we consider to be medicine through what the federal government's existing guidelines are as a Schedule 2 or lower drug.
But that's sort of surreal in a way, isn't it? Because we have restrictions on medical research across the board and what you can do and what you can't do, not just with respect to the distribution, but going into the full end of the spectrum of what you can research and where you find products for it. So how are you dealing with that in terms of how you're doing your due diligence on these companies and qualifying for your investment?
Sure. So those restrictions only exist if you're growing a plant and then going through an extraction process. Mm-hmm. We're not talking about companies that are growing a plant. We're talking about companies that are growing cannabinoids in a laboratory environment with the blessing of the DEA to start with. Mm-hmm. So if you go through a process and you're working with a large-scale commercial manufacturing organization or CRO or CMO that already works within pharma and works with controlled substances, they're asking permission ahead of time. And you look at a company like Insys or GW Pharma or Zenerba, these companies aren't going through a pathway where they're barred from doing scientific research based on the Schedule 1 classification. They're actually starting off by saying, okay, let's go to the feds and say, what do you guys need to see from us from a chain of custody situation? So, who's producing this controlled substance? Where is it going from point A to point C before it ultimately ends up in the consumer's hands? Is it going through a pathway that's what we're already used to. And again, you look at opiates, or you look at fentanyl, or you look at other controlled substances, all of these substances are being produced with the blessing of the DEA, as long as the DEA can sign off on what's happening. So the companies that we don't get involved in are the ones that are saying, oh, we're the most medical company you've ever seen. We've got this great warehouse in Arizona, and we're going to CO2 extraction processes, and then we're going to go through a secondary or tertiary distillation or fermentation process and come up with something that we then think is viable for the industry. It's not. It's not for me. It's been very clear that the only thing that they're accepting right now is being a proper pathway is either synthetic or biosynthetic. So you talk about the natural side of this industry for the pharma industry, it's not there. If you want to talk about for the wellness and therapeutic side, without a doubt, when you want to talk about things that would end up in Vitamin Shop or in GNC, yeah, you can do that through an extraction processes, but you're not going to be able to do the same clinical trials that you're talking about.
Let's talk about synthetics, because as we talk about these different markets, we'd be remiss if we didn't talk about that a little bit. Josh, why don't you tell us your perspective on the synthetic market, whether it be CBD, THCs, et cetera, and quality control, what have you?
Well, and I agree 100% that you're going to see kind of a trifurcated system. And I think the pharmaceutical side is the toughest rub, and it was kind of brought up earlier that the big pharma is going to come in and they're going to be you're going to have Pfizer be the Pfizer of cannabis. And I see that to an extent, but to an extent I think everyone wants to draw analogies, the cannabis industry to other things. Is it like the tech industry? Is it like the pharmaceutical industry? And I think there's a lot of unique points to the cannabis industry that get overlooked in that. For instance, in cannabis you have dozens of active compounds, and the pharmaceutical industry just isn't set up to validate a multi-component medication, and it's just not the way it works. For most of your medications are single molecule, and you're analyzing the efficacy of a single molecule. It's easy, you do a double blind, and you find out if it's efficacious or not. You have dozens of active compounds, it becomes very tough, but the beauty of cannabis is its very low toxicity. So I see kind of a more appropriate, I guess, when the dust settles, a more appropriate use for cannabis in the nutraceutical space, and maybe your synthetics reside in the pharmaceutical space. It's much easier to patent, it's much easier to protect, and so I see kind of a industry being created that doesn't even necessarily exist.
Sort of a subcategory?
And it's going to be entirely new. You're starting to see analogs of the cannabinoids come, and with kind of our greater understanding of the endocannabinoid system, we're going to do a little bit more targeted playing with it. But with the plant extracts from cannabis, I see that is ending up more in the nutraceutical realm, and you can have this kind of dual pathway. But why am I going to go get a prescription for say Epidiolex from GW and get it from the pharmacy when I can just go down and buy it from the health food store, unless my insurance is paying for it or something like that. But
Rob, any thoughts on that? Further?
Yeah, and to take it a step further, when people talk about the extraction of the plant, and they talk about it in the realm of either the recreational side or the therapeutic side, most of the companies you see that exist in the industry today, without naming names, but some of the bigger known brands, essentially what they're doing is buying their inputs from a whole host of different producers. And when you want to talk about homogenization, or you want to talk about consistency, it's nearly impossible to say I'm going to buy trim or buy extracted product from 50 different producers, bring it in, produce it on a step-by-step basis where I'm now producing a drink or a transdermal patch or a chocolate bar every 30 days. Every time they produce that, it's a different product. They can say, with relative certainty that the THC level might be the same, but the ratio of THC to CBN to CBD to the different terpenoids and flavonoids within there will never be homogeneous. And when I try to give an analogy, I give the analogy of, the difference between a single barrel scotch, a single malt scotch, and a blend. And when you have a blend, you're taking, scotch from 1,000 different producers and you're putting it together, but you do it once and you say, this is this year's vintage or this year's, production run. What you're seeing in cannabis right now is that people are doing single barrel every single time, and they're trying to put it out there where people are being asked to put labels on these products to say exactly what's in it, and they can't say with definitive certainty themselves because they don't control their inputs. So that's why when you think about what's going to happen on a medicinal level, for things to get through FDA passage or DEA passage to say that this is a product we can stand behind, there has to be such consistency in the product that there's no question that is it homogeneous, is it do you know how your body's going to react to it? Do you know with definitive certainty that I'm always producing the same product? And that's what's demanded from the pharmaceutical industry.
And just real quick to add to that, because we see it on the other end, I have a presentation I do when I'm talking to infused products makers that talks about stratified sampling, ideas of batch control, sampling throughout your batches. and people's eyes just glaze over. You know, beyond 1 month to the next, whether or not you're getting a standardized sample. I have producers who can't get a standardized sample from the beginning of their production run to the end of their same production run. And you have these producers who come in and say, you know, I tested this a month ago, and why is it 20% lower in cannabinoids? And well, you've done 30 batches between then, you're using completely different inputs. You might be doing a similar process, but the process control is just horrendous right now.
So guys, would one of the real winners be to invest in is those who develop what some people call varietals, which, being an IP guy, is basically a IP on a particular strain of cannabis? Would that be an approach?
I think you're seeing people do that already. And I think
you're seeing it now more and more. Would that be a wonderful category to be growing?
Oh, for sure, for sure. And there's some, you know, it looks like you're going to be able to protect different varietals, or you can already, and as well as people developing, you know, extraction techniques that selectively extract certain molecules as well.
When those big guys come in, the MNCs, the multinationals, the pharmaceuticals, what are they going to, you know, somebody mentioned earlier today, you know, going to look for good management. Personally, I'm a little cynical about that. I've been involved in a number of industries, and the big guys don't necessarily care about your management. They care about some other things. What are they going to be looking for? Mr. Pharmaceutical, sir, you were in pharmaceuticals as well. You're in pharmaceuticals every day, but you were in a pharmaceutical company. What are they going to be looking at as the gorillas come into this industry?
Well, for us, and I get that too as well. I mean, we look at our competitors as the Eurofins of the world, and in the big, you know, the labs and other industries that are going to try and come in, not necessarily the other cannabis labs, but we look at it as, you know, our data is incredibly valuable as a laboratory. We've been, you know, in business for 5.5 years. We've got hundreds of thousands of samples that we've run, millions of data points. There's some value in that data, as well as IP. IP is going to be a big thing, and certainly. Like I said, there's been a dearth of technically proficient people in our industry, and when we came in, we just noticed there's low-hanging IP fruit everywhere.
Well, you just give you a note. When I teach at Cornell Business School, I always say there's always a grunt in the back room who rationalizes the 40 times multiple that the pharmaceutical is going to pay. And that grunt's function totally is to take your IP and amortize it out over the extension of 20 years and show how that purchase price is really a bargain, right? Always. So IP, intangible assets, you've got to put it into your company if you want to be bought out, if your end game strategy is to be bought out by the big company. Agreed, Rob?
Agreed. Now take it a step further and not just say it's IP, it's defensible IP. You know, do you have IP that's, that you can bank on? I mean, there's a lot of people right now that are claiming that their SOPs are IP. I would argue with that contention. I would say that I look at business models every day, and the SOPs that this dispensary created versus that dispensary are largely the same. So there isn't really anything novel there. What's novel is when you have a patent that's been granted to you by the United States government, or a patent that's been granted to you internationally, that you can say, I can now keep any competitors out, and for someone to come in against us, they better be very sure that they've got much deeper pockets than we do to be able to crush us, or they're licensing through us. So when we look at companies and we try to figure out what it is that we think that they own, it's always down to assets and defensible IP, and then we'll look at the management team. And if we think the management team has the ability then to execute, for us, and that's very important. We don't just want to have the spinning heads on the team. We also want to have the business guys on the team as well.
Your charter, Rob, does not include investments in foreign countries. And some of us hanging out in Israel in the recent past have been terribly impressed by what Israel's doing in medical cannabis particularly. And some of us had the honor of shaking hands with Professor Maushalom, as sort of the Einstein of et cetera. What foreign strategies do you have, if at all?
Well, for us, we're a picks and shovels company, so we wait for there to be a pretty robust market before we look at entering. When Canada changed their system over, we certainly had a lot of interest from Canada, and as far as internationally beyond Canada, we've done more on the consulting end. So you know, beyond testing, we end up kind of becoming a solutions business, and so we can give someone analytical test results and give them their numbers and be just a straight service industry, or we can provide kind of solutions with those answers. And so that's something that we can do very easily internationally, and we've done a lot of that. But as far as expanding the testing lab, we haven't looked in that direction yet.
Rob, let me ask you something. One of the topics earlier today is when the Goldman Sachs and the big capital companies are coming into this market, are they more likely to come into that category? We talk about pharmaceuticals. Which of the markets do you think they'll be going into first, and why?
So initially, we believe the first wave of exits that will happen in this space will come out of pharma and biotech. We believe that's going to happen because we do believe one of the first things that's going to happen with cannabis is a descheduling away from Schedule 1, and once you go to a Schedule 2 or lower, those companies are going to want to come in as quickly as possible, and they'll have the decision of build versus buy. And for first mover advantage reasons, it makes more sense when they're never going to have the opportunity to buy companies as inexpensively as they will be in this first wave, to go out there and purchase companies that are holding large data sets and large defensible IP, amounts of IP. I think after that, as you get further along, I mean, again, when I think about cannabis, I think about it as an agricultural product. I think about it as a commodity, and I think that downstream, you're looking at people that are going to be producing row crops of cannabis specifically for extraction purposes. It won't be about just high-end flower anymore. The high-end flower market, I think, will always exist, but it'll exist as a boutique market the way that fine cigars or fine wine does today. But on the side of where it's going to be for acquisitions and what's going to be attractive, companies like ADM or Cargill, I think, will come in about 4 or 5 years and start purchasing groups that have built massive infrastructure. And when I say massive infrastructure, I mean companies that have 15 acres under glass from greenhouse. The days of the boutique warehouse grower are almost behind us. I give it another 2 or 3 years before people realize that producing at $2 a gram can never compete with a greenhouse that's producing at 60 cents a gram. The quality degradation isn't that great between the two, and if you're producing for extraction purposes anyway, it's of little concern whether or not you're producing at that perfect quality. For the people that want to produce in a 20,000 square foot warehouse to keep quality exactly where they want it to be, there'll be a market for that, but it's going to be a very small subset of the market that we're going to see in cannabis in 2020.
And just real quick too, and I think you're going to see big ag come in, and on the pharmaceutical side, you've got this plant that produces all these bioactive compounds, many of which are of interest medicinally, and really the cannabis that's on the market right now almost exclusively produces THC, the one compound that gets you high because that's all it was bred for these hundreds of years, but yet it has the potential to produce dozens of other compounds that are of huge interest medicinally. And so when big ag gets in and you see more targeted breeding operations, you're going to start breeding for these minor cannabinoids that don't necessarily get you high, but that are very medically efficacious. And that's where I think the IP future lies medicinally, is taking these plants and getting them to produce the compounds you want rather than just producing them artificially. Because why would you synthesize these compounds when you can get a plant to produce them way cheaper? Or produce other compounds that I mean, right now we produce insulin with bacteria. You've got little chemistry factories on trichomes of each of these flowers. Why not produce things like insulin with cannabis? I mean, there's a huge potential there.
Rob? Yeah, you're exactly right on that. And one thing I think people should note is that when you talk about the cannabis plant and you think about it from a molecular structure, you think that there's, depending on who you speak to, anywhere between 85 and 111 different phytocannabinoids that have been identified within this plant. When you talk about where this industry is right now, just the universe of medicinal cannabis or recreational cannabis today, you talk about two. You talk about THC and CBD. Some people now are starting to talk about THCV. But from the standpoint of other cannabinoids that occur naturally within the plant, most of them occur in such minute quantities that it'll take years to breed them into larger quantities where, from an extraction perspective, they're viable to do real work with. Even if you're going through an extraction using expensive equipment, if you're growing a huge harvest, you might be able to get a couple grams or milligrams of this cannabinoid out, which is why, from the standpoint of where we are as a fund and we look at it from a scientific perspective, we believe that that's why biocatalysis is so unbelievably important, because things that are unable to be produced in large quantities in a natural environment, in a laboratory environment, you can produce in kilogram quantities or metric ton quantities once you're actually really saying we want to focus on this.
There's some people that are concerned.
Yeah.
There's some people that are concerned, and I want your thoughts on it, guys, that, okay, the Justice Department, Cole memo, lots of people feel that the industry to some extent is not going to be intruded upon by the federal authorities, with exceptions. However, there are those who say that GWC's now status with epilepsy will force the FDA to come in a more assertive way. Are you worried about the FDA plunging into the cannabis market ahead of some of the other things that people are worried about? Setting regulations and setting standards?
To Rob Campion's point earlier, I'm worried about Schedule 2. Schedule 2 frightens the hell out of me. Everyone that's out there going, we've got to get on to Schedule 2. As Rob said, Schedule 2 doesn't address 280E. Schedule 2 doesn't address banking. Schedule 2 now throws you into a pathway where the FDA for years has already had a determination of how they handle Schedule 2. in many ways, that could mean the instantaneous end. If there's not a carve-out attached to the rescheduling to say we're going to allow the existing industry to remain as it is today, then yeah, I mean, the fastest way to end the cannabis industry as we know it today is to move to Schedule 2. And it's one of those things I'm surprised people in the industry don't better understand, because they think that's a magic bullet to save them, when I would argue that, you know, unless you take it off of the CSA completely, that it might be a lot more dangerous. And I think that for people that are looking at the Cole memo, or they're looking at Rohrabacher-Farr amendment, or they're looking at other things that have happened in the last 2 years legislatively, all of those things are great as a temporary fix to keep this industry moving forward. That's, you know, hopefully we can hit a carrying capacity or a tipping point that does, you know, move the conversation on a federal level past where it is today. But if it doesn't, and you get Chris Christie as your vice president, or you get Chris Christie as your attorney general, those memos are just that. They're memos. They aren't codified into law. So could this thing change, you know, on a dime? You know, I would argue it would be very difficult, but if you want to take a doom and gloom perspective of can it happen, without a doubt it can happen very quickly. And I think it's important for people to realize that that's why this November election is so critical, to make sure that you're actually giving money to MPP or giving money to NCIA or Drug Policy Alliance to actually get your voice out there and get these laws changed.
Josh, you have any thoughts on that?
Well, for us, I mean, increased regulation, the FDA coming in is a good thing, because there's going to require more testing. But in you know, globally, we're worried about kind of it gumming up the system, and that's what we're seeing in a lot of these states. Regulation is good. It's good to kind of at least finally have some rules and boundaries to play within. But so many of the states early on kind of just gummed up the works as far as what we do. And we're worried about that. But it would be nice to actually, for us, the biggest issue with the feds is getting some sort of pesticide tolerances established. And only the feds can do that. The states are just not equipped to do that. And, you know, for instance, if you have a single molecule of pesticide that you want to release on the market, there's 5, 6, 7 years of trials with the EPA just to get that one pesticide on the market for any crops that it's going to be approved for. And with cannabis, you know, all these analogies you try and draw from other crops just don't work, because it's inhaled, and in the nature of how it's consumed is so different, and in fact that it's so resinous and it likes to absorb other compounds different than like kind of water-based fruits and vegetables. So you can't compare apples to cannabis. So you can't even kind of draw analogies to what pesticides are used on other crops. And so the feds are the only ones that are going to be able to be equipped to give us some sort of direction when it comes to pesticides and microbiological contamination and heavy metals and all these other potential quality control concerns, and that's not coming anytime soon.
Got to get one more question in, because it's my favorite. You know, being a student, we're all learning about cannabis every day. If anybody out here says they know it all, I think they should probably leave the room. But I've always thought about the holy grail being the association between the phytocannabinoid and the endocannabinoid system in the human body. And we had a little bit of discussion about that. I'd love you to comment about that, because if we can prove that those plant-based products actually help the deficiencies and the defects in the human body and the endocannabinoid system, we're all very, very wealthy people. At least the winners in this room are very wealthy people. Any comments about that, please?
Well, yeah, and that's what's really exciting for me. And I kind of, the analogy I use is that, you know, the endocannabinoid system is a new discovery. We found the endocannabinoid system, which might be one of the most important feedback systems in our body, by trying to find out how THC works. And so I kind of use an analogy. It's like and looking
CBD,
for and CBD, and it's kind of like looking for a trade route to India and you know, hopping on a new continent. And that's kind of what we did with the endocannabinoid system. We went looking for just how this one kind of recreational drug works, and we found the system that's spread throughout your whole body, plays a part in almost every process in your body. And here you have this plant that produces all these compounds, some that upregulate, some that downregulate, some that upregulate one receptor, downregulate another receptor. So you've got this plant that produces all these compounds that play with the system, and it's one of the more important systems in your body. So it's relatively new. We just you know, structurally elucidated the first endocannabinoid receptor in 1991. Machulam, who you mentioned, discovered anandamide right around then too. So it's a new thing. It's not, the endocannabinoid system still isn't taught in most medical schools, and so we spend a lot of time too educating doctors on the endocannabinoid system, which might be one of the most important systems in your body.
Homeostasis, right?
Yeah, and you bring up CBD. I was actually working at Steep Hill Labs when we discovered the first CBD strain that I know of in the country that was commercially available to patients, because you look at, our job was really boring because we just tested cannabinoids and every strain looked the same. It was just lots of THC, whether it was 14% or 22%, not much of anything else. All of a sudden, one day, one strain came through and it had a ton of CBD, and it was a blueberry crossed with OG, and that kind of changed everything. But what about the high CBC strains? What about THCV? What about the CBC or CBDV? I mean, there's all these other compounds that need to become available as well, and that's the future.
Melissa's going to yank us out, so I'm going to let Rob have his last say, please. Go ahead, please.
Sure. I don't know if I can add much more to what Josh just said because that was very eloquently stated. The endocannabinoid system is something that we know so little about right now. When you start looking at different strains that are being bred specifically for genetic attributes, I'd be looking to the hemp industry as well. What you've seen with Finola 1 and Finola 2 and what you've seen with a lot of the other high CBD strains that are coming out of industrial hemp. We're just starting to scratch the surface right now of breeding for attributes that are not THC or not CBD. So in the next several years, one thing that to your question about the importance of identifying attributes, I think tissue culture is going to be one of the most important things that happens in the next 10 years, and people carrying strains of cannabinoids or strains of cannabis that are specific that'll never change with genetic drift, and actually keeping a tissue culture lab and saying, okay, let's keep a genetics bank that exists as our company. When you start thinking about patents and what happens in this space with biologicals, with actual plants, it's all going to come down to having something that's novel, that's patentable in the future, and that's going to come from crossbreeding. It's going to come from being able to keep a stable genetic code of that plant and protecting that IP like you would any other IP in tech.
If I can give one, why don't we give him a round of applause?
Thank you. Hello, everyone. My name is Mark Grayboys. I'm president and CEO of Next Frontier Biosciences, where biotech meets cannabis. We've been in stealth mode for the last 2.5 years, so I'm really excited to be here today to share our story and to offer you the opportunity to invest in the next generation of products that will redefine the cannabis space. Next slide, please. So these guys did a great job explaining a lot of this slide right here, which is, I have a quick question. So how many people here know what cannabinoids are? I imagine most of the audience does, but many don't. So the cannabinoids are the primary active ingredients in the cannabis plant. They act on certain receptors found throughout the human body, but primarily in the brain and the immune system. However, there are approximately 500 other chemicals in the cannabis plant, many of which are detrimental to the safety and effectiveness of cannabis-based products. As a result, most of today's cannabis products are crude, inconsistent, and unpredictable. Next slide, please. Currently, the most common modes of administration include smoking and vaporizing, which have well-known health risks, and edibles, which lead to slow and unpredictable absorption of the cannabinoids. Compounding the problem is the fact that the vast majority of products are highly impure and lack any meaningful scientific formulation. So what does this mean? It means that it's nearly impossible to dose today's products in an accurate, consistent, and reliable manner. So I don't know about you, but I won't invest in any product or brand that doesn't provide a reliable consumer experience. Next slide, please. At Next Frontier Biosciences, we are redefining the cannabis landscape using advanced analytical, purification, and formulation methods. For example, this is Beatrix, our $500,000 mass spectrometer. This powerful machine provides state-of-the-art chemical separation and identification capabilities that lie at the core of our drug development program. This is the type of equipment you'll find in a high-end biotech laboratory, but you won't find in 99% of other cannabis production facilities in the United States today. Next slide, please. With the help of Beatrix, we're developing a line of proprietary formulations of mixed cannabinoids for nasal and sublingual administration. The benefits of nasal and sublingual administration include a rapid onset of action, improved safety and effectiveness, and the avoidance of first-pass metabolism. First-pass metabolism is the process whereby the liver metabolizes or inactivates a lot of the vast majority of cannabinoids in products that are consumed orally. That's the reason why many edibles have such a delayed onset of action and are so unpredictable. The other benefits of our products will include purified and optimized cannabinoid profiles, meaning we can develop specific formulations for specific medical conditions such as chronic pain, PTSD, and depression. Improved bioavailability, meaning that more drug is absorbed into the bloodstream at higher concentrations and lower dosages. And accurate dosing, which leads to more consistent and reliable consumer experiences. Importantly, by developing novel formulations and delivery methods, we will generate new intellectual property and trade secrets that will be used to support our global expansion strategy. Next slide, please. We believe our product profile will appeal to a large and untapped consumer segment. People like Sarah, Michael, and Jack, who are seeking safer, more consistent, and more discreet modes of administration. These are people who recognize the benefits of marijuana, but don't want to eat, smoke, or vaporize a crude and unreliable product. Next slide. To execute on our plan, we have assembled a highly experienced management team with a proven track record of success. Personally, I have over 20 years of experience working with emerging growth companies, including 8 years as Senior Vice President and General Counsel of Allos Therapeutics, a biotech company that I helped take public and sell for $195 million. Paul, our co-founder and Chief Scientific Officer, is one of the leading experts in the field of intranasal drug development and delivery systems. He has over 100 patents and publications to his name and has served as Chief Scientific Officer of 3 other biotech companies. Dot is our Senior Director of Pharmaceutical Development. She has over 20 years of drug development experience and has served in scientific leadership roles in multiple other biotech companies, including OSI Pharmaceuticals and Gilead Sciences. As you can see, we have a great team. We're also privileged to be working with some of the best advisors in the industry. You may or may not recognize the names on this slide, but they're all leaders in their respective fields. Whether it's IP, regulatory, brand strategy, or marketing, our goal is always to surround ourselves with the top talent to maximize our success. We've developed an innovative business model that provides multiple revenue streams and supports our goal of establishing a global leadership position. In many ways, our strategy is similar to the Coca-Cola business model in that we will license our intellectual property and trade secrets to strategic partners in other state markets who will be responsible for the manufacturing and distribution of those branded products. We will also establish a powerful brand that emphasizes the functional and emotional benefits of our product and positions us as the product of choice for discerning consumers. Next slide, please. Here you see an overview of our timeline and key milestones for our first product launch. It's targeted for the second quarter of 2017, and we're right on schedule. I think everybody here knows all the market demographics here. The market's expected to grow from almost $6 billion in 2015 to over $22 billion in 2020, which represents a 30% compound annual growth rate. It's a very large and compelling market opportunity. Here are our financial projections. We believe we have a highly scalable business model with significant upside potential. Some of the key assumptions here are that we've licensed the product into the top 10 state markets by 2020. Those markets represent an approximately $19 billion retail market opportunity. And by achieving a 1% market penetration in those markets by 2020, we believe we can generate $37 million in revenue, which would result in a 2021 exit value of approximately $180 million, generating a 50% internal rate of return for our Series A investors. Next slide, please. So by now, I hope I've demonstrated that we have the team, the technology, and the market opportunity to make Next Frontier Biosciences a compelling investment opportunity. We're offering to sell 25% of the company for a $5 million investment. The use of proceeds will be to go to market in Colorado, establish the brand, and begin executing on our multi-state licensing strategy. So thank you for being here today. At Next Frontier Biosciences, we are developing the next generation of cannabis products that will be highly purified and scientifically formulated to provide accurate, effective, and consistent dosing. Will be distinct from everything in the marketplace today. And that's all I have for you. So thanks very much. If you're interested in speaking further, I'll be outside.
Or the first presidential primary, but we are getting those wonderful sponsors at MedMen to come and do a little investor discussion. So, if the MedMen people will come on up, here we go. And I see them in the back, anxiously ready, just like if it was WWE, getting all excited, getting whipped up. So, if you'll give the MedMen a big round of applause. Oh, you can do better than that. It's the end of the day. We're an hour away from a cocktail. Or anything else that you may want to do here in beautiful California. So, returning to the stage is Adam. I remembered your name very well. And do you have a presentation on here? Okay. I just want to make sure.
So, and that's to date. And that's why we created the fund. In the last 4 months, we have raised and spent over $20 million directly in the space through SPVs, with our investors getting over all of those hurdles and us and our management company providing them that certainty of execution in the back end. And the investors have been pushing for more. They've been pushing me to help them diversify more. They've been pushing me to help them de-risk the deals more. They've been pushing me to help them press their investments more. And so, as I'm sitting here today, presenting the first 9-figure private equity fund in the history of legal cannabis. Clicker. And this is how we do it. We're laser focused. Let's remove marijuana for a second from the fact that we're investing, and let's just look at it like any other business. Who gives money to a group of people to go invest on their behalf when the group of people's answer is, oh, we're going to go invest across all different verticals. We don't really know yet. We haven't figured it out yet. Or, oh, I know a guy, and a guy's got a license for sale, and we're going to go and we're going to figure it out. Nobody does that. The way that you invest dollars for real is you're laser focused. Here's what we're great at. Here's what we're the best in the world at. We understand this more than anybody in the world understands it, and we're going to go take advantage of that. We have a laser-focused approach and mandate. We're locked in on only the most strategic markets. Ready? Raise of hands. Who here in their inbox in the last 30 days has received some type of pitch to go put money into a deal in the state of Colorado? Oh, you guys are lying. Half of you. It's embarrassing. Who in their right mind would ever do a fucking deal in the state of Colorado? It's the 33rd most populous state in the country, and they've got 3,000 licenses. Addressable market to total licenses makes 0 sense. I wouldn't. I would never put my money to play in Colorado, because why would I? I have way better places to put it. So, only the most strategic markets. This is focused on how we're doing this, and we're focused on where we're doing this. This is a fund, but I already have the first $40 million of the fund under my control and underwritten. We know exactly where our dollars are going. We have a $7.5 million GP co-invest. This is our life, this is our project, this is everything we've been working for, and this is our money that we're investing right alongside yours. And then ultimately we have a captive operating partner. Since 2009, we've been building up to what we now have in MedMen. And now we're leveraging that to be able to provide certainty of execution to the assets that we own in the fund. Next. Laser-focused approach. We only live in the world that is the universe of growing, manufacturing, and selling pot. We're not going to talk about tech plays. We're not going to talk about IP plays. We're not going to talk about global strategy to do things I don't even understand. We're going to do what I understand and where I understand to make money. Now, this universe isn't just going and buying a license in Los Angeles. This universe is there is dirt, there's a building on top of the dirt, there's fixtures inside of the building, and there's a license that allows that building to go grow, manufacture, and sell legal pot. That's the universe we play in. I love this slide because for everybody here, you have some interest in cannabis, and I doubt anybody here has ever actually done this math. Why would I want to go ahead and put dollars to work in Colorado? 2012, Massachusetts was the first state to create what I call a merit-based oligopoly as their system for licensing marijuana businesses. Every state since then has adopted the exact same system. Every state from moving forward from here on out will adopt the exact same system because it's the only system that makes sense. And in that system, there are a few restricted licenses that are responsible for producing legal marijuana for the entire state. That's the universe I want to play in. I want to be part of the oligopoly. Again, because why not? When I say that we have under control and underwritten the first $40 million, Chris Ducar is in the back, and Chris Ducar probably did this slide. Everybody give it up for Chris Ducar. When I say that we have under control and underwritten the first $40 million of deals, I'm not just saying, oh, I know a guy. He said I can go do his deal if I just bring him the money. I'm saying, no, I have under control with hard deposits, real underwriting. This is actually a real deal. We don't have the name of the deal, so nobody can go scoop it. I know that I see you here. But this is a real deal, and these are, this is real underwriting. And these are real returns, and these are real numbers, and these aren't numbers that I academically came up with. These are numbers we are living right now with the deals that we're in today. And then lastly, we have the captive operating partner. We are the gold standard, not only because we're the only ones doing it, but because this has been my life since 2012. And when nobody thought to do it, we went out and did the hard thing. We went out and recruited talent from analogous industries and said, hey, come be part of the world of cannabis. And we went and grabbed our director of cultivation who was working for a sub of Monsanto running around NAFTA, setting up greenhouses for Monsanto clients. First he thought I was a little nuts, then his wife said he couldn't do it, then we had to give him a package that I couldn't really afford, and then I finally convinced him to come work for me. When we grabbed the controller from Chobani Yogurt and said, hey, you worked at a really high-growth, crazy business that was essentially a manufacturing business, and we heard that you had an entrepreneur lunatic for a boss, hey, why don't you come do that with us in cannabis? Why don't you move from New York to LA to do it? So, we went through the process of hiring the top talent, having them create and codify systems, institutional quality systems to go run marijuana businesses. We then built a software component to go run these businesses so we could show up today and be these guys. And that's who we are. And so everything that the fund invests in, every asset the fund holds, will have a captive operating partner. Here's something else I'd like to talk about on the operating partner side. Again, remove the fact that this is marijuana. Who goes ahead and creates a hospitality REIT? Who goes and creates a real estate fund or a hotel fund to go invest and not have a captive operating partner alongside? When have you guys ever heard of that? Who does that? So why is it that people are running around the pot world saying, oh, we're going to go do a deal in the state of Washington. It's great. We can go buy the license for $1 million. Yeah, who's going to run it? So again, why are we not thinking about this the same way we think about anything else we do? We want downside collateral. We want hard assets. But guess what we get here? We get blue sky upside and tech-like potential. Guys, I talk about it all the time. We look at Canada and we look at the public markets activity and the valuations being placed on these businesses. That's blue sky tech, baby. But guess what? I don't have to go cut venture checks to hope that 1 in 100 go ahead and turn into $1 billion. I get to go cut very strategic checks and say, guess what? If it only does halfway decent, I'm making a killing, and I own a piece of dirt, and I own a building, and I own the fixtures, and I have all the downside that I need. But if it does extremely well, and we have a piece of a license in New York or California or Nevada, and when the roll-up happens, somebody wants to come pay me 10 to 12 times forward-looking EBITDA multiple on that asset, well, there's my, blue sky tech-like returns. So, in conclusion, look, this is a once in a lifetime, end of prohibition opportunity where we get to leverage our informational arbitrage to go see outsized returns that we'll just never see again. Period, end of story. And I think you guys all know the last part, or you wouldn't be sitting here on your Tuesday afternoon. I think that you just haven't been presented the opportunity yet to go access it. And that's what we're here to do. So thank you guys very much for listening to my pitch. And again, I appreciate being here. All right, thank you.
So, next is an investor discussion panel. And for all you family offices out there, here's your chance to really get all those little questions you've been talking about all day answered, thought about, and really moving into next level. So, if we can bring up to stage Giovanni. Oh. Giovanni. Stage with Giovanni is Saul Beverly.
This is the one. You left the one over there? I'll go.
Giovanni, the moderator. Give him a round of applause. And with him comes Cliff Davis, Milton, Alice Globus, Phil Bunker from Globus Club, and Saul Beverly. Give him a big round of applause.
Okay. Welcome, everybody. Thank you for joining our panel. For those of you who don't know who I am, I'm the portfolio manager to a single-family office. The family office was formed around 1938. Essentially, our wealth was generated through coal mines, and we were a Jewish family that had to escape Czechoslovakia because of the Nazi invasion. Our family ended up coming to the US, and we were very concerned about safety at the time. The US was particularly anti-Semitic. The family remained in cash, and lawyers and professionals in our family office have done nothing but a professional and ethical job. Results be damned, we have essentially been managed into poverty. I believe that you cannot grow your family office with pedigree and process. You can only grow your family office with profits. So I am an unconservative investor, and I'm looking for phenomenal returns. Because in the disclosure statement, investing is inherently risky. You may lose all or part of your money. Well, if I have to accept the fact that I could lose all or part of my money, I'd like to at least double it. A couple of years ago, I was skiing in Colorado. I'd been skiing for many years in Steamboat. A friend of mine who I admired, and this is the level of my admiration, when there was a powder day, which is a lot of snow, he continued to go to work and didn't, do what was known as the powder clause, which was essentially if you can drop a pencil into the snow and it doesn't fall over, it's considered a powder day. Everyone shuts down and goes skiing. So I was very impressed that he didn't do that. And he had a medical marijuana business. I do not smoke pot. I've never done drugs in my entire life. And when he said to me, you know, it's going to be a booming business when this goes recreational. I've just been sort of staying alive. If anyone's seen the documentary High Profits on CNN, the story of this guy mimics the story of that guy in Breckenridge. I made an investment in that pot business, and in the last sort of 2.5 years, I've made between 1,200 and 1,400% return on investment. For anybody who's in the investment community, there's a book called Fooled by Randomness, A Random Walk Down Wall Street, and I really felt that just because I knew the guy and I happened to be in the right place at the right time, that I was fooled by randomness. It was a phenomenal return, and I made the investment. The goal of this panel is for me to be Socratic. We have one point. I'd like to know in this room, I would classify 3 types of people, right? There are people who are looking for investors, and there are people who are investing, and then there's someone in between that is both looking to deploy capital and receive capital, right? So like a fund of funds sort of thing. So I would like to know how many hands in this room are people who are just looking for capital? Okay? How many people here are looking to get capital and receive capital? Okay? And how many of you are purely investors? Okay. So for those who are purely investors, we are kindred spirits here. So I want to know why this incredible opportunity is a phenomenal investment. When I made that investment in Steamboat, Colorado, quite simply what happened is that I thought I did the safe thing by investing with this guy and then taking the deed of his grow facility in case he defaulted and so on and so forth. Then a couple of months later, I heard that there was a sheriff in Kansas who had tripled the amount of police cars on his streets because there's a certain seizure law or forfeiture law that essentially says that if you're committing a drug crime, the police can just forfeit your assets even before you're found guilty. And I thought, oh great, I just exposed myself to the fact that just because I know pot is being grown in there, that I thought I was being safe by taking the deed of the property. In reality, I'm now, for the rent, I am now exposing the full value of my property to be seized. So, we have, I'm sorry, I forgot your names. We have Saul and Alice.
Chris.
And Chris. Saul and Alice, I'd like them, sorry. No, right here, Chris and Alice. I'd like to introduce these two. They are both seeking capital and deploying capital. And so Chris, please tell us about your fund and your investment thesis.
Sure. So Chris Gannon, I'm Chief Strategy Officer of MedMen. You just heard my partner Adam give you a background on our fund. First and foremost, we are a institutional operator and management company. We have best-in-class individuals that have background and expertise in marijuana, but also in big agriculture, technology, science, things of that nature, and proprietary systems and software to run cultivation, production, and dispensaries in typically supply-constrained states that we transact in. So think of us as a hotel management company. We'll sign management contracts with third-party licensees, and we'll also run our own stuff. Out of our own stuff, we have a $100 million opportunity fund where we are deploying capital and buying assets in the space in which we are then operating assets where we deploy capital.
Wonderful. Alice?
So Globus Growth is a fund that will be investing into the cannabis space. Kind of how I got involved with cannabis, like so many of you here, I'm sure my father had Parkinson's disease, so I was looking for an alternate form of treatment for my father to not replace his standard of care, but to supplement it. Now, my family has been investing in healthcare biotech for close to 20 years, and what we were doing with healthcare, I started seeing a lot of parallels into the cannabis space, so I started looking into the space as a point of opportunity, not only to help people such as my father, but other people that were suffering from rare diseases that you hear of in the space.
Hi, my name is Saul Burley, and I'm a real estate investor. I work pretty much full-time for a hedge fund that's in the bond business, and because of my real estate background, I analyze real estate that backs up the bonds. I got into the cannabis business as an investor because we own property in Denver Metro, and we started buying there with the fund, outside the fund, 5 years ago. And when the law passed, it was just something that was interesting to us. And given the fact that the hedge funds' real estate positions are national in scope, I have to analyze properties all over the country. So we did some transactions in Colorado where we buy property and we lease to the marijuana companies, and we help them. Some of them we have to finance outside of property ownership. So it's something that I don't do full time, but I'm active in it.
Okay, so Saul, before we came in here, I told you that I thought I had done the safe thing by taking the deed to the property, and then you were like, oh my God, you exposed yourself to, I thought my risk was
Once
the
I heard
DEA coming in.
sheriffs and guns and ATVs with windbreakers, I said, I didn't know. But now I know what you're doing. Now I know a little bit more.
Okay, so could you please tell me, when a landlord knows, a professional landlord, an institutional landlord knows that their property, their sort of industrial warehouse is going to become a grow facility, does the real estate investor add a risk premium to the rental or so on and so forth?
Well, there's always a risk premium because the government can seize anything they want anytime, and then you have to get it back. And they can seize whatever they want, and they can just do it. Generally, in Colorado, the laws are pretty clear, and the Med in Colorado is very active in its oversight. So every lease in the state of Colorado where a cannabis company wants to lease space, that has to be quote unquote approved by the Med as part of their oversight. And they're very strict laws. Most prevalent law, or the most known law, is that unless you satisfy 2 years of full-time residency, you can't have any ownership interest. And by ownership interest, there's no creative financing. You can't have options, you can't touch the cash flow, you can't make participating loans. They figured out all the creative financing gimmicks, or they have people that have told them what the creative financing gimmicks are. So generally in Colorado, you're pretty safe unless you are just doing something in the quote-unquote black market that they can show that you purposefully did, as far as seizing your property where your cannabis company is a tenant. Now you can lend to cannabis companies, but it's got to be a straight loan and it's got to stand on its own.
Okay, so here's a perfect example of how I was fooled by randomness.
Well, time out. You said you have the deed. Did you, when you gave him money, did you buy the deed or did you lend against the deed?
I don't remember. It was about 2.5 years ago.
It's a big difference, because if you lent against the deed and you took the deed as collateral, you're fine. Then you don't. Then you have to foreclose on that deed to own the property. So just because you have a UCC security interest in a deed doesn't necessarily mean you own it, which, by the way, can insulate you because you're really a lender. If you lend and the guy gives you the deed, depending on the state, the deed may be held in escrow if it's a deed of trust state. If it's a mortgage state like New York, there's a lien against it, and then you have to perfect your security interest. So I think you're okay.
Okay. So
hope that answers your question.
Look, I just go out and, I'm a hunter-gatherer, right? I go out and hunt, I bring the deal back to the family office, and the family office does the mid and back office.
Well, I think Saul brings up a very important point. It's when you're looking to make an investment, you need really local counsel to evaluate your risk going in, because in California, for example, it could be segmented to city, let alone county to county, state to state. So it's important to bring in a lawyer that is familiar with the topography of the regulatory status.
Absolutely. Every transaction that we've done, we have two sets of attorneys. We have real estate deal attorneys, and then we have local regulatory attorneys who know the laws and know how to protect us for high fees.
Okay.
Or so they say.
So can you just give me a short answer, okay? Two people come to you to rent a warehouse. One wants to store DHL boxes, the other guy wants to create a grow facility inside the warehouse. They meet all the regulatory requirements and everything, okay? what's the risk premium that you add to the rental of the pot business?
Higher rent.
Proportionately speaking, okay?
That's short
Would
enough?
you say, no, could you give me like a 50% risk premium or 100% risk premium? So if the rent is, let's say, $10,000 a month, if you're going to make it a grow facility, I want $15,000 a month or $20,000 a month. What's the risk, what in your mind is the appropriate risk premium? And what have you gotten so far, let's say?
In prime areas where we have prime positions, 20%.
Risk premium.
Risk premium, cash carry, basically. If rent is $10 a foot to a FedEx, which is a credit tenant, and they would pay 10 a foot, but a marijuana company's going to outbid them, we'd have them put up security deposit and maybe 25% more.
Okay. All right. So can we please talk a little bit about the abundance of pot licenses in Colorado versus their constraints of pot licenses in New York versus what might happen here in California? So,
yeah, I mean, look, to your question before in terms of what's the risk premium associated on the real estate side, I mean, we are both a lessor and a lessee, so we see it from both sides, obviously. And I think the answer to that question really depends on which market that you're in and what the supply constraints look like in those markets. So as you alluded to before, Colorado has a lot of licenses relative to a relatively small addressable population. So you look at a state like Massachusetts or New York. In New York, there's only 5 licenses. Massachusetts, there's 21. So there's a lot more supply constraints for these landlords having real estate that works for marijuana purposes. So I would think that the premiums would be probably higher in those states than in Colorado. I think that that's both the investment opportunity and also the risks associated in this space is the fragmented regulatory nature of how how everything looks in the U.S. Each state's like its own country. Each state has its own sets of rules, and it's important to understand that. As Alice mentioned, both from a state level, but also in certain states from a municipal level, because it might vary from municipality to municipality as well. And being able to understand that, both from a lawyer perspective, it's great to hire local counsel to help you get up to speed on all of that, but to understand all the regulatory layers that formulate an investment thesis to appropriately create a kind of scalable investment strategy in the space.
So can you tell us what happened, how much money people expended to achieve a license in New York and did not achieve one in the end?
So first off, I might be biased because we don't invest at all into the licenses or grow facilities. And New York is probably one of the reasons why we do not. So there was over 2,000 applicants for 5 licenses in New York. Of those 2,000 licenses, New York State basically limited it down to 40 companies that had a chance of providing more due diligence to the state to see if they would be appropriate for one of those 5 licenses. Now, what I've seen and what I've heard from those people that I've talked to is the average cost of those 40 was between $7 to $10 million that those people had spent to try to obtain a license. So they didn't even receive one. And then of the 5, I've heard between, the average was probably $7 million that they spent before they even started building out their facilities. And they had 6 months to build out their facilities. So the expertise you have to bring in, if you weren't prepared to leapfrog into that is astronomical, because if you didn't meet the strict timeline to the state, you could lose your license completely. And one of the licensee holders did have issues with that because once they were receiving the license, they weren't able to receive follow-on capital because people got nervous once they saw what the market really was turning out to be in New York.
So did they, when when the people made those applications, did they know that only 5 licenses would be granted? Or was it a black hole?
It was kind of a black hole. Initially, it was supposed to be 20 licenses, and they weren't going to be vertically integrated. So dispensing and growing were 2 separate. Now they're 1 license for dispensing and growing, seed to sale. And Governor Cuomo basically arbitrarily picked 5 licenses for the state of New York, which is crazy considering there's 20 million people that live in the state of New York. Also, in order for you to qualify for a medical license, you have to have 1 of 8 debilitating illnesses. And my father happens to qualify for 1 of those licenses, and he lives near Syracuse, New York. There's not a single doctor in Onondaga or Cuyahoga County that is willing to prescribe a license to my father because Upstate Medical has told their doctors that they will be fired if they prescribe to their patients. So, and that's actually illegal for them to be doing that, but you have these doctors that are in fear of losing their medical licenses, which is unfounded. And going home to their husband or wives and their kids and telling them, well, I lost my job because I prescribed, a 72-year-old man cannabis to help with his tremors.
So, if I understand correctly, in Colorado, and it's limited in my experience, everything is relative to Colorado for me, you can get fired for smoking pot. You're saying that even though it's legal, medical marijuana is legal in New York, the doctor can still, it's not a wrongful termination to have prescribed because
yes.
medical board has its own rules and ethics.
What the hospitals are in fear of losing their federal funding. The fear is,
okay.
So whether it's founded or not, I can't vouch for that, but it's the fear that they have.
Okay, so as an investor, let's say I got an opportunity to invest in New York. Hey, wow, you had a great experience in Colorado. It's going to be, I don't know what the population is times in New York, and I could have been wiped out, right? Because I wasn't with, how many, Goldman Sachs backed how many of the people who actually got?
I don't know about Goldman Sachs backing that. I don't know if they backed any. I don't know where that came from. But, a lot of those people that they're private individuals, some family offices. It was a pretty wide range of investors, both foreign and domestic money that came into New York. Now, what is really interesting about the New York market, which is in theory the 2nd largest market in the United States, is structured, even though it's very limiting, it's pipelining it, I think, to what will be a prime setup for the pharmaceutical industry because of how they're structured. They are really setting up the standard operating procedures that a pharmaceutical company is really looking to acquire when trying to get into this space.
Okay.
Yeah, I was just going to say, I think it's interesting to look at the regulatory construct of what's happening in New York. It's a program that's just got off the ground from a medicinal perspective. Obviously, doctors are, not prescribing it to patients. So looking at it from a business perspective, as an investor, one, there's significant supply constraints to the licensing regime there, which is great. 2, there's not a significant amount of cash flow that's going to be generated because you've got a small addressable market. Now look at that as relative to a place like California or Nevada or something like that, to where it's more mature of a market. There's California is 49% of the North American cannabis market. So you're going to have you're going to have a larger, higher cash flow in California, less in New York. But I think at the end of the day, once it becomes federally legal or the regulatory environment changes, because there's 1 of 5 and because it's set up for, I agree with that comment, for a pharmaceutical company to just go buy one of those 5 licenses at the end of the day. It's a different investment thesis.
So is that your exit strategy?
Current cash flow versus a more long-tailed investment thesis to where you're not going to have current cash flow now, but you'll have a larger exit in the future. Different things that you have to consider based on the risk appetite of an investor and what's really more important to you, whether it's current cash flow versus long-tailed upside, or maybe a combination of the two, depending on how California looks at the end of the day, or Nevada, or some of these other states. But I guess it goes really most importantly into understanding the regulatory construct in each state that you want to invest and where to deploy capital, but then most importantly then, who's your operator? How's your operational expertise within that specific state as well?
So both of you address making a safer investment in pot because both of you think that it is very important to bring in sort of professional operators. Can you talk a little bit about the level of due diligence on behalf of the operator, not you making the investment, but crossing T's, dotting I's? What is the caliber of professionalism presently within operators? And I didn't know this was possible, but you can actually lose money in pot, regardless of chasing after licenses that don't get handed out. Can you talk about experiences where people have lost money in pot and you maybe bought up, bankruptcy and turned it profitable, turned it around?
Sure, I guess I can start. First and foremost, I think that's the biggest problem that exists in the space is the lack of institutionality on the operator or the company side. So it's very difficult, whether you're doing real estate, whether it's equity, debt, equipment finance, whatever, it all depends upon the operator. It's a very operationally intensive business. So if you want to make sure you're getting your rent check, you need to make sure that you've done your proper due diligence on the operator side. Obviously, we don't have that problem because we first started as a institutional management operator, and we think that we can quell a lot of that operational risk for investors by being a captive operating partner for our fund to where we're deploying capital. So that's our investment thesis and kind of our investment approach. But I think that aside from understanding the fragmented regulatory landscape of the U.S., I'd say that the biggest risk in the space is the operational
So you
risk.
think the biggest risk is operational? You're not concerned that, it looks like we're going to get Hillary Clinton and Donald Trump as the next president, but imagine Donald Trump becomes a sort of Ronald Reagan and he espouses his conservative credentials and solidifies his the potential conservative base by saying, I'm going to cramp down on vice problems, pot being one of them. You, as Mark Twain said, more harm is done not by the things you don't know, but by the things you think you know to be true that are not.
Sure. Yep.
So you think that the biggest risk is operations and it is not a changing regulatory environment?
Yeah, Rob and some of the folks earlier today kind of gave more eloquent responses than I will give right now. But yeah, I don't really think that's a risk, even if Donald Trump is the next president of the United States and Chris Christie is the Attorney General.
But it does push out your timeline for when you're going to begin to see a return on capital.
Mm-hmm. Yeah, I think the thought is it's not a binary risk to where they're going to shut down the entire program. They've already come out and said they're going to respect states' rights. Spending bills have already defunded enforcement. As long as are only the states that we operate in or have regulatory compliant either medicinal or recreational programs. Those are only the states that we play in. So I think it's going to be very difficult if Chris Christie is the Attorney General to go to the governor of the state of Colorado and which is operating in tax surplus and reinvesting a lot of those tax dollars back into infrastructure and schools to say, hey, we're taking that away.
Okay.
And going into Nevada, I think, talking about Harry Reid's son having a license and a lot of the who's who of the business and political communities in Nevada having those licenses, they have a lot at risk.
Okay.
To where I think it's going to be difficult to get in a fight with the federal government.
Alice, were you going to say something?
I'm going to kind of segue on that. So one of the things that you have to keep in mind is, money shapes policy. Now, if you're investing in an American company, let's say a car manufacturing company that produces right here, in Michigan, you're roughly every dollar you spend on a made in America product, it comes back into the U.S. economy 1.4 to 1.5 times. What we're seeing now with cannabis, for every dollar you spend on the actual plant, it trickles back down into the local economy 2.6 to 2.7 times. So the amount of money that's being reinfused into the local economies of these states, is immense, and a lot of people are eager to have these job creations, the influx of capital that's coming, from the tourism. There's a lot of peripheral things that are completely unrelated to cannabis that's really benefiting from this industry. And once people begin to see these effects, which they already are with Colorado, they're going to not want this to stop because they want to see the economic development that we've been wanting for a long time in the United States.
I can tell you how it's coming in if you want. What you just said, I can give you stats.
Please.
So we have, here's an example. What does that mean? It impacts the local economy and where's the money coming from? So one of our tenants came into a warehouse. It's going into the extraction business. They need water. Lots of water. Greenhouses, the whole thing. I'm not a scientist and I don't know quite a bit about it. I just know that they said we need to go underground and we need to expand the pipe to a 4-inch water tap. So from 2 inches to 4 inches. Well, the city of Denver's building department, how do they price that? They say the construction cost at 60%. It's a $90,000 ticket, just that. So $90,000 that doesn't even get into the quote unquote, tax revenue that the Wall Street Journal said Colorado performed on. That's an example of a trickle down. Right. You try and build something in Denver, anything, or Colorado, construction costs are up, 35%.
So that's a good segue for what I have. When someone in the pot business comes to me and sort of says, invest in my pot business, I'm a little hesitant because the fear that I had, before I made the actual investment with this pot business in Steamboat, Colorado, was, what do I do with the cash, right? So for other investors, this was the advice I got. As long as you're not making the money in pot, but you're making the money, they're making the money in pot and they're giving you a dividend, then you can deposit that inside the bank and just say it comes from this company. It's up to them to figure out that it's coming from a pot company and then deny you that deposit.
You want to be careful doing that as well.
Okay. Damned if you do and damned if you don't. Tell me what I need to be careful of.
Well, I'm not a CPA, but one of the things when you're investing into this space, you really want to get down and really look at their books and records, how they are handling their cash, how are they, if they're running the money through a management company so they're getting all normal tax benefits, well, there's a bunch of businesses that are being shut down because guess what? The IRS has realized that you're just putting all your expenses in this holding company. So these are things to look in when you're actually investing is how they're currently maintaining their records of their income, because that's very important, because I feel it's not a matter if you get audited, I feel it's a matter of when. So I want to protect myself, in my family office, and then the family offices that are co-investing with me in the best way possible to make sure that, they're not trying to save $20 on, the lunch that they just had with investors. So these are things that when you're looking to invest, make sure you really have a CPA that's familiar with, the cannabis industry to take a look at their books and records.
So
try getting insurance too.
Oh.
The pot investment that I've made, the guy who did it, he's just rolling in cash.
Mm-hmm.
Why are you going to people who have not yet invested in pot and asking them to invest in pot when there are existing pot investors that have just so much money and they don't know what to do with it? Why not just go to them? How do I have a place at the trough? Why have not all the pigs sort of prevented me from getting to that trough?
So, to start, I think that there's a lot of high net worth investors that have realized sort of this arbitrage opportunity that exists right now, just from taking the time to understand the different layers on the banking side and the regulatory side, culling through a lot of the fragmented operators that are out there and getting comfortable and actually investing in the space. So for people that have lost money, investors have made money as well. The point was made earlier that in November, once you start to see a lot of recreational and medicinal states have programs that are elected in, you will see a dearth of institutional capital. And what I mean by institutional capital really is the $5, $10, $15 billion AUM funds that are already starting to figure out how to carve out vice clauses out of their existing LP base to invest in the space. So I think the window is very...
They're going to deploy how much cash? How much cash can be deployed into this space, do you think?
I mean,
in
we have
preparation for the referendum in California, how much cash can be deployed?
I heard a statistic last week, and I haven't validated the statistic, but I heard to build out Nevada for full-blown recreation, that there's going to need to be $400 million put into all the infrastructure that's going to be needed to supply Las Vegas.
400 million, okay. And what do you think the return on investment will be on that 400 million?
Well,
guesstimate.
It's so hard to say because we're really trailblazing here. There really hasn't been something comparable to this. And then are you looking at this on getting an ROI? Or are you looking for, a cash cow that's coming in? How are you going to get your money out?
How has Colorado done relative to Washington when it went from medicinal to recreational? Do we know?
What metric?
Well, I think it's too soon for.
What metric are you looking at?
Let's just sort of use high profits, right? In that movie, in that documentary, they talked about how the Breckenridge store, the day before had, let's say, like $1,000 in sales, and on the 1st of January, it had $30,000 in sales, which created capacity constraints and so forth. Prices went up. Did you not mention also that that the margins are compacting in the pot business?
That's what our tenants are saying.
Okay.
So I mean, again, I think that depends on the state that you're operating in. I mean, certainly, in a more free market state like Colorado, margins are getting compressed because there's more supply, right? There's not supply constraints to licensing. In California, as a for instance, I mean, the market right now, you're buying licenses for $2 million and you're buying businesses for 1 to 2 times what the legacy operator is doing on an EBITDA basis. I have deals in Colorado that are sent to us that are getting presented to us at 6 to 7 times EBITDA multiples. And then if you look at the publicly traded markets up in Canada, as a for instance, obviously it's federally legal from a medicinal perspective up there, and there's a handful of licensed producers and a handful of those that are actually trading on the Toronto Stock Exchange. You look at those, depending on which day you look at them, they're 6 to 12 times forward-looking EBITDA multiples as that program starts to get up and running. So, we look at, obviously like California, 49% of the North American cannabis market, we can go pick up assets for 1 to 2 times what the legacy operator is doing on an EBITDA basis and immediately go in and quadruple, quintuple EBITDA. We like those types of markets better than obviously going into a less supply constrained market in Colorado. But I think it's indicative of different markets, public, private, some more free market, some more merit-based oligopolies, and the wide differential of just multiples that exist in these different spaces.
Okay, so, sorry, I forgot your name.
Chris.
So we heard from Chris a very sort of econometric, sort of business operation, business management answer to a question, right? I'm an investor. I want to know how much money I'm going to make. So, Alice, you were talking about PIPE, so that's private investments in public equities. Can you talk a little bit about the sort of opportunities there, and why not real estate, or why not operations, why pipes?
Okay, so just to kind of give a background on this, I've been investing in healthcare biotechs for around a decade, and my family's been doing that for significantly longer. Now, I see there's a lot of parallels with both cannabis on the pharmaceutical side and pharma. Now, one of the things to get a drug to market is on a minimal 10 years and $100 million. So a lot of these companies go public very early to raise large quantities of capital. Now, one of the things as an investor, you can take advantage of market time opportunities from small amounts of information being released, whether it's getting, a license in a state or whatever it is. You can take advantage of these situations. But that said, you are investing in thinly traded companies. A couple of weeks ago, Pineapple Express was just was stopped by the SEC because it quadrupled within 5 to 6 hours. So these are risks that you can assess and then take advantage of. But people have different theories on how successful you can be, whether it's luck or actual forefront looking into the technology.
So Alice, when Warren Buffett bailed out Goldman Sachs, he gave some money to Goldman Sachs and then announced he'd given money to Goldman Sachs, and then suddenly Goldman Sachs shares went through the roof. Can you talk about the lead investor? What spiked the Pineapple Express stock?
I don't think it's been really disclosed, which is partly why the SEC is investigating the situation there. And that's part of the risk when you're investing either in the private market or the public market. It is really important when you're investing in these companies to talk to the management of the company, not for insider information, but just to see, are you investing in a disruptive technology? Because I think at the end of the day, you're looking at what IP they have. Because I don't want to be investing in cannabis once it converts into a real commodity. I want to be investing in something that they're actually disrupting in the current market. And with what we're trying to do is we're trying to look at cannabis from a pharmaceutical perspective. When you think about when cannabis was made illegal by Nixon, a computer was the size of this room and was using vacuum tubes. Well, we've come a long way with technology to be able to use real standard procedures to look at the cannabinoids, and we have the ability to do so. It's just bringing that to fruition.
Has the market matured in Colorado, where now you buy a can of Coke and it tells you how much carbs and sugar is in there? Has the market matured in Colorado, where you mentioned about the independent labs that have sprung up and other opportunities to invest there, another sort of ancillary service part of the industry?
Well, our friend here talked about lab testing earlier. You really need to know what labs are being tested, because what I have seen is that there's a massive differential between testing in the labs. For New York State, for example, so you have to be tested in a DEA facility. Well, guess what? There's only one in New York. Aren't they lucky? And what's happening is that the 5 licensee holders are testing in their own facilities, and then they're sending 20 samples to the testing lab, and the testing lab is giving them 20 different results for the 20 different samples that they sent. And there's no consistency of testing, because they're not telling them, well, we're testing the flower, we're testing the stem, we're testing the seed. They're not letting them know. So there's still a huge opportunity for a standardized testing to come in and really have a standard of care that I think the industry is really needing.
Can you talk about future investment opportunities in the sort of real estate space for pot? Is it more industrial with the grow facilities, or is it commercial with the retail locations?
Well, I was listening about when I first came in this afternoon. There was somebody on one of the other panels was saying, go buy up retail corners in top tier cities that are within 1,000 feet of a school. I mean, that's easier. Right, that's easier said than done, because generally the more the highly populated areas, that stuff is hard to find, and if you can find it, you have to try and find it where it's either vacant or the tenant who's there doesn't have 30 years of lease extensions. I mean, we own some stuff in Colorado that is not cannabis, but we have Taco Bell for the next 20 years in good locations. The play in real estate that I'm seeing where the big scores are looking to be possibly made are in kind of hinterland areas, because if you believe that the price is going to eventually go down because it's a commodity, that means that they're going to have the operator. I mean, my two colleagues on the panel are much better skilled at understanding the operators than I am. I just want to make sure, can they pay the rent, and can we get some more upside? But if you believe the price of the commodity is eventually going down, that means that Well, it is a commodity. You know, the price of the flower or the...
If you're only doing a grow, if you're not doing any concentrating, you have
Right.
no pharmaceutical.
Right, exactly.
Whatsoever, or advantage or diffusion.
Right, well said.
Yeah, that's commodity, true.
Right, well said. But one of the panels before talked about these massive greenhouses that are going to be popping up. Well, these are in areas that might not be so densely populated, because how can you find, 5 acres to create greenhouses? So that land may be cheaper than prime Denver or prime Reno or prime.
You can sell truck, you can sell county to county.
Well,
Yes, you can.
it depends.
Well,
Why?
why what?
Why you would, in your own overall focus, why would you pick a state that has less population than there are with people that are marijuana cards in Los Angeles alone?
Wait, I'm sorry, I don't understand the question.
I just said, you gotta go where the gold is. You don't go in the hills, you're not gonna find it.
Well, you also have you also have operator risk, and generally we find, again, we've been active in certain states, but this is a new industry. So generally, you buy a property, and who's going to put up the TI to trick out the warehouse, and the warehouse with the lights and the power and the water and the permits is substantial. Somebody is doing it. So the key is, I would say, is bet on the right jockey.
Okay. Well, I mean, it's all the real estate is tied to licenses, right? So.
You only got 800,000 people.
Well, yeah.
All right,
so we want to look at, I think, number of licenses to total addressable population, and be obviously in more supply-constrained markets. That's going to be tied to the real estate, and it's all just a factor of supply and demand, to your point.
Okay, Chris,
I think
so
those would be the real estate plays.
you see the value in the increasing value of the license. The last point that we haven't addressed, and I would like you to quickly answer, is what is the value of the brand? Are there brands emerging? And what is the value of a recognizable brand? Let's say Snoop Dogg's pot or something like that.
So
1 minute responses. Please.
Sure. So from a branding perspective, I think the brands are interesting. There's just no infrastructure to go incubate brands, distribute brands, license brands today. How do you go take a brand from California and make sure that all the supply inputs are exactly the same and consistent to maintain and duplicate that brand in Massachusetts or New York?
Let's just go to California. California or Colorado.
Yeah, but that's the
brands
most
within
important.
a state.
So those brands don't really matter right now.
They don't
brands
matter.
in Colorado, I don't think really matter right now. I think the brands in California matter a little bit more. But then again, there's no brand distribution. So it's, obviously that's one of the value propositions.
Even with edibles?
No, because how are you going to go reproduce that edible in New York or go reproduce that?
Just within Colorado.
You're locked into a state, man, that's the whole program.
Yeah.
Yeah, that's right. So you have to go reproduce that. You have to go reproduce that brand in a particular state.
If I make 1 million gummies a day in California, I can sell them. If I make 1 million gummies a day in Colorado, yeah, I'll sell them in a year.
Yeah, that's right.
Or I won't make any money.
Yeah. So I don't know, look, from a branding perspective, we find it interesting. I mean, we're really laying down the infrastructure on the management side to be able to control a lot of those supply inputs in a variety of different states that we want to be in. And then we can control the operations, and then we can go distribute those brands in New York,
So
California,
you give
wherever.
no value to the potential.
Very little
brand
value to
recognition.
the existing brands that are in the space right now. I think you'll have, take marijuana out of it. When Frito-Lay wants to get into the space and do Cheetos, I think that's an interesting brand. But
Snoop Dogg?
I think, look, Snoop has a brand. I think that there's other hip-hop artists and, music stars that have brands. I think, again, it's difficult for Snoop, if he's attached to a vape product or something like that, to go distribute that brand outside of California.
Forget outside of California. Just by state. There's still a lot of value.
Because there's a whole marijuana market in Massachusetts. There's a marijuana market in New York.
50 million people, what do you care about 2 million people over there?
Okay. Alice.
That's why we're investing a major part of our dollars in California. Sure.
Alice, how much would you value a present brand and the future growth of a brand?
Like I said before, I think it's significantly more important to invest in a disruptive technology. Even in the adult, let's take out pharmaceutical completely, adult space. There's brands that are really looking to standardize the recreational experience for their end consumer. So I would be looking at a brand that's really addressing a problem that's not currently being addressed. And I think that's where you're going to start to see the brand pull ahead in the market in the long term. And they're going to be a good acquisition target for when Frito-Lay, Budweiser, Philip Morris does come in and start to look at these things.
Right, the first thing they'll want to be able to confirm is that you have distribution.
That's right.
Everybody believes they can make the best product, whether they can or not.
I disagree with that statement because depending on how the laws shake out, if you're partnering with Pepsi or Budweiser, they have the distribution channels already in place. They already are there.
Channels in place, but they're not the equal distribution channels.
But we don't know how the laws are going to progress.
How could we know?
But that's what I'm saying.
If you went to Canada, for example, Shoppers Drug Mart, which you don't hear of here at all, right? But they're huge there. They're starting to sell medical marijuana at their location. They have 786 locations. I don't think they're working. They're not getting New York or whatever.
Well, because
If they did, they'd already have their.
okay, so what we have here is already a disagreement. Okay, the management operators want to see cross-state growth, and an investor here is like, I'm fine with growth or market share within a state. So this is a good example between an operator and an investor. But
Well,
so
I'm an
we
investor. I think the most important thing is I want to see my money back. You know, at the end of the day, I'm not interested in putting $5 into California and then never seeing it back, and the operators are sitting on a cash cow. I want to see my money back so I can redeploy it in another product that has another disruptive technology.
Okay, so
What's your question? There's crooks in every business, 7-Eleven, whatever you're doing.
So in the interest of time, we're going to let the panel finish the last one talk, and then we'll be moving on to the next speaker.
okay, so can you talk about how you determine what leasee you would allow inside your tenant? Is there a brand? Would you say, oh, you're a single brand, or you're like under one of these management companies, I'd rather the management company, or would you say, look, just give me the returns, I don't care how you run your business?
You have to, okay, so in 29 seconds, you just have to dig into it, and you find layers. I mean, you just have to dig into who owns what, where the license is, and how much capital they have, and where the guarantee is coming from. Very often, these operators that we have several layers of how they're financed, and you just have to follow the paper trail and make a business decision.
Okay, one 10-second answer. When you have a warehouse, are you seeing that the people who want to come in are sophisticated and they say, we want you to pay for the tenant improvements, the lights, the pipes, and so on and so forth? Or are they just saying, give me the space, I'll deal with everything?
We have small people that are really smart that just, they don't have the money to put up to do it. And then we have sophisticated people that are very impressive that come in and they just want one of our locations because they want to be there, and whether they want to control their own destiny or they need it for the layout, they want it, and they come in with a lot of money. Now, whether or not they're going to survive, I don't know.
Okay.
I can just tell you they come in with cash.
I want to thank our panel, and hopefully you'll be able to speak with them after the panel.
Let's give Giovanni a big round of applause also. So we're going to invite Skip up. Come on, Skip. See you. Good to see you. We're taking a unique piece. He's been listening all day as a potential investor. He's going to bring it all together, and then we'll have a couple of closing remarks, and then we'll have to talk about it.
I'm going to try and entertain you. Got a little timer here to remind you. Okay. So I'm an investor. I've run several family offices, and I'm about to partner up with someone. We have $1 billion under advisement that can be done consulting sort of fast. So I really care about ROI, IRR, and I care about business success. Speed might be a think it is a gold rush. But I think it's not your standard gold rush. I think it's a regulated gold rush. And I think it's more analogous to what happened in the liquor industry after Prohibition. And what happened after that? Was it a free-for-all? No, not at all. It's an unbelievably regulated industry. I have 3 or 4 interests in different wine businesses. I have my own wine, 2 wine labels of my own. I bought an urban winery with a couple tasting rooms, and I'm an investor in a big custom crush plant that did 500,000 cases last year. So I know about regulated industries really well. What happens in regulated industries? People that have political clout get regulations that benefit them. And we haven't really talked that much about it, although Alice made a comment on the last panel. She said the DEA facility, you're required to test in a DEA facility. Aren't they lucky? No, they're not lucky. You know damn well that somehow they had an influence on some politician or legislative body that gave them that exclusivity. So that's where your profits are. So when I try and sell my wine into certain states, there are a few states where there are only 3 distributors by law. I cannot ship to a restaurant, a store, a liquor store, or an individual by law, or it's a felony. I can only sell into that state through one of 3 chosen distributors. It's pretty close to a monopoly. So I think that's what we're going to start seeing happen here. I agree with the contentions that the little guys are going to get just wiped out by large multinational companies when they can figure out how to do it without having personal risk and corporate risk. So I think that's something we have to keep in mind. There was a comment about Trump, and I'll make a prediction. I think that he wants the Bernie Beanie Babies on his side, so I think he'll make an announcement that he wants people to be able to do what they want and enjoy themselves so long as they do not harm others. Well, there you have it. I'm an unbelievable prognosticator. Thank you. Appreciate it. All right. So, point to take away is that it is a gold rush, but it's quite regulated, and you're going to start seeing some big companies control the whole thing. This issue with interstate commerce being restricted is problematic. But these big companies they have factories all over the world, and they put out a product that's similar. This is not a crazy product. So a couple of other issues. There have been some allusions, references to the 280E IRS code, and I'm not positive it's been defined. Has it? No, for those of you that don't know what 280E is, that's a specific act by Congress that said that those entities, companies, individuals that traffic in a controlled substance, one or two, Schedule 1 or 2, they must declare their income. We learned in law school you have to declare your income from whatever source derived, but you may not, if you are trafficking in a controlled Schedule 1 or 2 substance, you may not deduct ordinary business expenses. So what's happening is you can deduct only your COGS, your actual cost of goods sold, right? So the actual product itself, but you can't deduct your labor costs, you can't deduct your rent costs. There may be a few exceptions, but this is my general theme. So what happens is you're creating a situation where people are not going to declare because they can't. They have a negative, if they paid the taxes, they would have a negative income and they wouldn't be able to be in business. So what happens now? You open it up to whistleblowers and you open it up to organized crime, I think. People that come in. Foreign companies, well, that's a good point. I'll have to ruminate over that one. So going back to the government risk, I asked that question about, in the worst case scenario, what could happen, and our answer was sad and frustrating, that it could potentially be the death penalty. I don't think that's going to happen, of course. But I don't know if you remember when they passed that law in California allowing medical marijuana. So it was a legal concept. I was at lunch with a couple of clients, ultra high net worth people, and one of them pulled out a letter that he'd gotten from, I believe, the Department of Justice. And it said, "We will confiscate your building if you let this activity continue." And then another guy at the table had received the same letter. The point is, the government, I don't trust the federal government, sorry. They operate in silos. And so the DOJ may or may not be working with the IRS or some other governmental entity. And I think that you're subject to the whims, the political aspirations of someone in one of those particular areas of government. So I think that's something else. I think there's more risk than we are being led to believe. Hopefully, both Trump and Clinton will loosen the reins on that. All right, so I have 3 minutes left here. So a couple other points. Let's see. How do you make money? I think you have to take advantage of existing regulations and anticipated regulations. Someone very near and dear to me happens to own some industrial property, which just happens to luckily be in an area that's in the zone where this community in the desert allows you to have a dispensary and a growing license. A lease was just signed at 3 times market rate for that. So that's one way you can make money. But I agree, just going out and buying property willy-nilly is probably not going to get you where you want to be. I'm going to reiterate a few of the points that I took out of the speeches today, and I'll be gone in 2.5 minutes here. As a California, this is a question I had, as a California resident, assuming this passes in November and we have full recreational abilities, you know, we're a pretty big state, but we become a tourist destination like Colorado sort of has. And I was thinking, well, do I have an incentive to not agree with the earlier speakers that are trying to go get it legalized in every state? It's probably in my best interest as a California resident to not have it allowed in the other states, because we could be the place in the whole United States where it's legal and we can all make money in our taxes. Well, you know, there'll be more taxes generated. Just give me a second here. I'm not advocating that, of course, but I'm talking about that's that mentality of these companies that have power to create regulations that benefit their own company. Let's see. We had some great speakers. One point was made, avoid the shiny paint, find the true engines. And I do think a lot of the shiny paint organizations are going to disappear. This banking thing is really interesting. I happen to know some people that have a number of dispensaries in one state, and they have a big vault in one of their growing facilities. And who knows how many tens of millions of dollars are in there. But it'll eventually make for some really good movies where people come in and try and orchestrate theft. The point about how these small companies that have a niche think that they're going to get big, I love that point. Yelp is still going to be Yelp. They're going to figure it out. These big companies are still going to do what they're doing. They have every competitive advantage. So this concept of limited licenses. So I asked the question, is that going to be like liquor license? Like, you know, if you have a restaurant, or you want to open a restaurant, and you want to sell hard liquor, at least in California, it's going to cost you about $150,000 to $180,000 to get that license to do that, because there's only a handful of them available. The municipality restricts them. And then, of course, you're familiar with the concept of taxi medallions. So I'm wondering if there's going to be a secondary market in these licenses. So I would anticipate you're going to see governments be pressured by certain people who are going to get the license to limit the number, therefore making them much more valuable. So listen, I don't have anything else to say. Thanks for listening. It's been a great event. You really did a great job on this one. Thanks.
Thank you so much. Great job. So now the Handpicked Company is inviting you all to have a cocktail behind us, and you have to spend the rest of the afternoon getting to know all your